All right, who wants to be the first to ask questions? Mario, how long were you doing what you were talking about?
I had him go through the commands for charting, and some of those, at least for the charting bot, because it looked like, well, we discovered that the pinned list wasn't updated. So he did that for me for like 15 minutes, but he had it going before I jumped on.
I see. Okay.
Really, no one has no questions.
I'm sure
Uh,
some do. They're just shy.
uh, Hi.
Hi.
So I'm holding a Tesla 680 a 1218 call. Do you think it's worth holding, or is it better to get rid of it on the Monday morning?
8:30 on
Um,
day one.
it depends. Are you in profit?
No.
So you're down?
Yeah, the Wednesday's market down got me into a little of a red.
I see. What price was the stock when you bought it?
Sorry, what's that?
What price was the stock when you bought it?
Uh, I don't know. I don't exactly remember, but it was like around 620.
Okay. I don't know. I mean, uh, what day did you buy it? Did you buy it on Friday?
Not on Friday. Just give me a second. Uh, uh, I don't. I don't know when I. Actually, it's on 12/8, December 8th.
So how come you didn't sell it when it went
Uh,
up?
I, yeah. So I put a stop limit. For some reason, when it went down, my option didn't get sold.
So stops don't really work with options because there's more than just the price affecting the contract. There's a few things that affect the contract. So stops really don't work, especially a highly volatile stock like Tesla.
Okay.
So when
Yeah, I
something
think.
runs up like it did, you got to take
Mm-hmm.
profit. You can't keep holding it. And you see
Okay.
why now because you're down. And you've got
Mm-hmm.
5 days until it expires.
Mm-hmm.
I mean, so two things. You didn't give yourself enough time, number one. Number two, you didn't get out when you had profits, an opportunity to get out.
Yeah.
So, in my opinion, with extremely volatile stocks, don't set stop losses. Just get out when the the, the contract goes up. Take your profits when you
Okay.
can. Because I mean, the
Yeah.
market's going to take it back, and you clearly see that, right? I mean, you can see now the market it gave you profit, and now you're down.
Yeah.
Not a good place to be in.
Yeah.
And
Yeah.
and with option
I.
buying, you need to always have in your mind when something starts going up in value,
Mm-hmm.
you need to take your profits as quickly as possible.
Okay. Yeah, I was just hoping on the betting on the stop loss, so didn't work. Uh, yeah, I will try to like sell it for as less loss as possible.
I mean,
I got a question.
it might. Somebody's got an echo here. All right, it might. I'm thinking it'll keep going up. I think it'll hit 700 before
Hmm.
the 21st, maybe on the 21st, but your contract just doesn't have very much time to it. So as
Yeah,
soon as you see profit, you take it, or if you can break
yeah,
even, take it. I mean, I don't know how much your contract costs, but um, 5 or 10% loss is usually okay to take.
okay,
But with Tesla contracts, I mean, I'm sure it's, unless you're far out of the money, it's probably expensive.
yeah, yeah. All
I
right,
got a
thanks.
question. I got a question.
All right.
Okay, so I bought Disney. I bought Disney when it was at its peak. When it was at its peak, I called Disney when it was at. My call was $4.50, right?
Okay.
And now it's at 247. So I lost like 1,800 in net. So I'm trying to see like, what should I do? Should I wait or just like accept the loss? Because this is my first. Tomorrow will be my first day in you guys' class, which I'm really excited to be in. So I'm trying to see if I should like just accept the loss and start from there or keep Disney.
Well, um, what's the expiration first on your contract?
December 18th.
Hmm. And how much did you say you bought and what it's at?
About 9 contracts at 450, and right now it's at the current price is two. Well, the current is 247.
So what I would recommend, I mean, all right, so let me, is it safe to assume you bought it on Friday? Did
Yeah,
you
I
say
bought it
you
on
had?
Friday.
Okay, so um, first thing I would say is avoid buying anything at highs, no matter what.
Mm-hmm.
Um, Second thing I would say is come Monday, I would think you might see some green in market open and then it falls some more.
Okay, so market open just
If
probably
yeah, if you
sell.
got green, yeah, try to take it because I mean it's at a high and I just I don't know. I mean it
I
could
thought
go
it was
either
gonna
way.
keep
I'll be
going
honest
up.
with you.
Yeah, it
Um,
could. See, when I bought it at its peak, I thought it was gonna keep going up since it was like reaching its 52-week high. So I thought it was just gonna just burst through that and just keep going. But instead, it shot right down.
Let me see here. Shit, that's all time high, not 52 weeks.
Yep. Well, it's all time high. Yeah.
Yeah.
So I thought it was since it was breaking it was just gonna keep soaring up, just keep going. But I guess I was wrong.
Yeah, I mean, anytime you see something doing all-time highs, avoid being bullish on that. I mean, there are circumstances where it'll keep going, right? Like Tesla.
Mm-hmm.
There's not a lot of equities out there that are going to be like Tesla. And that one's a very rare one. Um,
Yeah.
Disney, I mean, I don't know. I don't see them continuing, to be honest with you.
Yeah.
I
Me
would
either.
say, yeah, I mean, I would say pay attention to pre-market, see what it's doing pre-market. If you see red, there's probably a good chance it's going to open red, um, and just because it's such at a high. And I'm looking here at the MACD. This when you see the blue and the tan line really far apart like this,
Mm-hmm.
um, that's a good indicator it's gonna fall. I mean, if you look over here, what two 2 or 3 weeks ago, did the same thing. It was far apart, and then the next few days afterwards, it fell, and it took it about 2 weeks to finally breach above the next level. So, it looks like we could be in the same situation.
Yeah, it does look that way. I got one more question, if you don't mind.
Sure, go for it.
AMC, that was one of my favorite stocks to call for, and I made a lot of money in AMC, but Friday I got 200 contracts of AMC, and I got it at 26 cents, and now it's at 21. I'm trying to see if there's a possibility for that to go above 26 in the future, or come Monday or next week.
Um, well, the IV rank is fairly low. Current IV is really high though. It seems kind of odd to me. This thing must have really crazy volatility.
Yeah, it does. That's why I kind of like it, because it always, once it goes down, it always goes back up.
Um, I mean, it's at support, right? Right
Mm.
there. You looking at my screen?
Yeah, I'm looking.
Okay. Yeah, I mean it's at support. So it needs to break through. So it's bouncing off this resistance level, this short-term resistance right here.
Hey, sorry to interrupt. Do you think the news of Pfizer coming out with the vaccine and this week coming up, Moderna, it's going to drive the price of AMC higher, given that
Mm-hmm.
people are going to be able to start going to the movies again?
Mm-hmm. So you think it will go up?
I mean, there's potential. So I'm trying to do an analysis on it right now. So if you look at this,
Also, like it seems like it has like a pretty good flag pattern. Like
It does.
it's coming up to that like level, and it's been doing that, pretty consistently. And it seems like it's about that point where it's gonna pop out.
it might. Question is, do you have enough time on your contracts?
I have
Yeah, I
until
would.
the 18th.
Yeah, I did January 15th.
So the 15th sounds good, but the 18th of December may
Execute
not be
once we
enough
see them
time.
and keep your mind fluid because
You said
nothing
the
is fixed.
18th of December is
What's
not
true
enough
tomorrow may
time?
not be true the
No,
next
I
day.
don't think so.
May not be true next day.
Can you guys please mute your mics if you're not talking?
So, Ryan, like we said, is going to be a gap.
Yeah, I don't know if 18th is going to be enough time. I mean, you've got 5 days for this thing to. So, what was the price of the stock when you bought it? The contract. So not the contract price, the
Well,
price of the stock itself.
not the country. Okay, the price of the stock when I bought it was at $3.99. I think $3.99, and I was betting that it would go past $4,
Okay.
and I got it at $3.99 because it was just going up at first.
You must have got it at the start of the day then. Looks like.
Yeah,
I mean, that one has more potential in my opinion compared to Disney. I mean, Disney seems
yeah.
like it's really overextended. It's not
Might
to say
just
that it won't keep
sit.
going, but it might have done a little bit of retracement and then start heading back up again. Especially with the COVID news and all that, and vaccines, and December is a bullish month.
Yeah,
So I mean, Disney looks. I'm sorry, not Disney. AMC looks like it definitely has potential. Let me just go a little further to the left here, and I mean it's got some pretty heavy resistance right here at the 463 level.
yeah.
I got a
My
question.
oh, yeah, you can go. You can go.
Right there.
Oh. Thanks. So,
Hold on a
what
second.
is
Hold
your
on. Please hold on. Still talking to Bazal. Um, so it's in an uptrend, right? It's setting higher lows. That's a good thing.
Mm-hmm.
It is having trouble getting past this area though. But I do believe, like someone recently was talking about, the previous person that was kind of in on this conversation with the vaccine
Yeah.
news. I think that'll make this go up. Um, but the only issue that I see is your contract time frame. If you had the January 15th like he does, you'd be fine. But the 18th of December, I mean, you've got 5 days
Yeah.
before the contract's worth zero, right? So something that I would suggest in the future, give yourself a lot more time. If you're trying to swing something,
Mm.
give yourself a lot more time. If you're just trying to get in and out same day, any contract works. Um, Weeklies with 2, 3, 4, 5 days of expiration.
Yeah.
If you're trying to scalp and be in and out today, that's totally fine. If you're trying to swing something, then you need to give yourself a lot more time. I mean, a month, minimum 3 weeks, in my opinion. Unless you think by Friday news is coming out, then you can. I could say give yourself 2 to 3 weeks for that. If we're looking at you know something by the end of the month, then at the earliest you get the January 15th, right? So
Okay, so
you know,
when the expiration date is over, that means it hits zero.
yes,
So like no profits, no nothing.
mm-mm. It's zeroed out at that point. So,
You just lose your money.
oh yeah. So here's the thing: is
Wow.
as the contracts, so theta decay is going to erode the value of your contract. Every day it erodes the value. So every day the price of the stock needs to climb. If it doesn't climb, then that value of your contract is going to continue to erode, and it's going to be worthless by the last day of expiration. So, what's your strike?
My strike is, let me go to it. My strike is 26 cents. The current is 21.
No, no, the strike that you purchased.
Oh, the strike. My bad. Is 426. Now let's
420.
break even. Hold on. I'm sorry. Let's break even. Hold on. Let me go to the strike. You saying what I purchased it at?
So, are you looking at my screen right now?
I'm looking.
These are strikes. $4, $4.50, $5, $5.50. Which strike did you purchase?
I think I purchased. I think I did the 426.
There is no 426. So your position right now, it should say something like 1218 call
Oh,
4.
well, I see. Okay, I see the amount, equity, break even price, expiration date, current price, average cost, total return.
What broker
Today's
are you using?
Bezel, you're using RH, aren't you?
Robinhood.
Robinhood, huh?
Yeah, I'm using Robinhood.
I
Take me a
knew it. It's
screenshot
on
of
the way.
your take a
I
screenshot of
got it.
your position and post it on
Next to the date and the word call, what's the
Trade
value
floor.
there?
Oh, $4. I'm sorry. It's $4.
But I told you, let's wait for traffic to go down, and
I'm
if I
sorry. It's $4.
Okay,
I will.
$4 strike. Please, guys,
Yeah.
if you're not actively
I guess
talking, mute your mics because I'm going to mute you if you don't. Okay, so $4 strike. Every day you're going to lose $2 on that contract. And looks like I don't know what you paid for it, but you're going to lose $2 every day until Friday. If the stock price is not above $4, your contract's worth zero.
Okay. Thank you.
You're welcome. Okay. Um, there were two people next. I'm not sure which one of you guys.
My question was answered kind of as you went along. So
Okay.
whoever had the other question can go. Thank you.
All right, you're welcome.
Hey, I have a question about the Snapchat.
Okay.
So what's your prediction in the next week for Snapchat, for example, from Monday to Friday?
Snap's been doing pretty well recently, obviously.
Do you think it's gonna be growing till $70 for the stock?
And what time frame are you talking about?
I don't know, so it was 3 months.
I could. I mean, let's see. Maybe not. It's hard to say. I mean, I don't really know what to predict on this. I don't necessarily follow Snap. It's in a bullish uptrend, I can tell you that. Let's see.
Okay.
There's your trend line. So I'm going to go a little bit further in. Get rid of some of this. So there's your trend line right there. I would expect this to continue up this trend line. I mean, it had, I guess earnings is what, yeah, so it did well on earnings, it looks like. I would expect it to continue this trend. I don't see any reason for it not to. I mean, if you see a day like this one right here, if you see something like this, that's probably a good place to get into. When it does that, you get in at the end of the day.
Okay.
And give yourself a month of time.
A month?
Yeah, I always, unless you're unless you're scalping, give yourself plenty of time. A minimum, in my opinion, a minimum of a month to swing something. Because
thanks.
50% days till expiration. So let's say you get a 30-day expiration. By day 16, you need to be out of it, because by day 15, theta is going to have decayed enough to the point where if the price goes against you just a little bit, it's going to hurt, right? And it's going to be a lot harder to recover.
Yeah, that's right.
So you guys got to keep that in mind when you're purchasing contracts. You want to be out as fast as possible, to be honest, but at latest 50, 49, 48% days of expiration. That's the longest I'd hold that. I wouldn't keep holding it beyond the 50% mark, because it's just going to continue to crush your value, your contract value. I mean, even if the stock price does some nice ripping, you know, you'd be lucky to see just a little bit of profit.
Yeah, that's right.
Also following on that, do you think like what would be a good percentage to get out on? Usually I use 20%, but as a long term, what do you recommend?
So I'm a little bit more of a conservative trader. I like 10% returns, 15% returns. But also matters how many contracts you purchase, how long your expiration is, what your outlook is, what your expectation is of that stock to make a move in the direction you're looking. I mean, if you just buy something blindly and you have no strategy, then, you know, I would say at a minimum 5% to 10% you should be getting out of that, because if you have no real strategy, then you're just kind of throwing darts at the board blindfolded. But if you have a strategy, then, you know, you kind of take that into account, and that'll help you determine what's going to be the best course of action, what's going to be the expectation, and then you draw your entry based off of that. Does that answer your question?
Yeah. Also, what are your thoughts on like long-term stop loss?
Well, I don't personally like stop loss, as you heard earlier. The first person that asked the question, um, he said he put in a stop loss and it didn't initiate. So that's one reason why I don't like stops. They're really not that great. I mean, unless you're doing shares, then stops work absolutely. But options, it's hit or miss. So if you're doing options, I would say if you're buying options, you need to babysit it, unfortunately. Um,
All right. Thank you.
you're welcome.
Hey, Hustle.
Hey, Hustle. I was watching your Roth IRA lecture the other day. I was wondering how much of your portfolio do you actively trade with and swing shares with, and then how much is just kind of invested for the long term?
I don't do any long-term investment. It's all swing shares.
Okay. How many stocks do you usually have at a time in your portfolio?
5 to 10. I try not to overtrade because I want to leave room to average down on anything that goes in the opposite direction.
Okay, so would you leave like a certain percentage of like cash to the side to average down, or would you just pull money from other stocks?
50% of the account. So if I've got 10 grand, I will only invest up to 5,000. And if it starts going against me and it starts being, well, let's say 20 or let's say 30,000, because five grand or 10 grand is not really going to do much for you. You're not going to be able to be in, but maybe 2 or 3 positions to be able to stick to that rule. So if I've got 30,000, I'll invest 10 to 15, 8 to 15,000 into 5 to 10 stocks. Depends. I normally like to do 1,000 to 2,000 on each position. I normally like to do 1,000 to 2,000 on each position, and that because I don't like to go in heavy, right? And the reason I don't go in heavy initially is because I expect it to go against me. So I want to get it for a lower price, but I want to go ahead and get in case it starts to go for me. So that's kind of how I approach it. Is I'll say, look, all right, I'm gonna throw 1,000 at it, and if it goes up, and I make 150 to 150 within the first week, then I'll take it because it almost always happens where I'll do that, and then 3 or 4 days later it comes back down to the same price that I got in at.
Yeah.
So then I can get right back in for the same amount of money and just continue doing that, right? I mean, my philosophy is you get into something, it shows profit within the 2 or 3 days. That means you chose the right time, you chose the right level, get out. Or at least set a trailing stop on shares, because at least that way, if you got a trailing stop going, if it keeps going up, you keep making money, and then the moment it falls, it exits and you realize your gains.
Yeah, that makes sense. So what's like a usual percent gain where you take profit on stocks? Would that be anywhere from like 1 to 5% or so?
It depends. So, I mean, I'm happy with 2.5% to 15%. 10 to 15%, I'm really happy. If it's beyond that, I'm extremely happy. But I'm content with 2.5%. I mean, excuse me, I'm over here belching. Let's see, $1,000 times 2.5% is $25. I'm okay with that. I don't have a problem taking just $25, because if I take that $25, let's say I get in today, in the next 2 days it shows me $25 and I take it, or at least I set a trailing stop. at say $20 a profit, and then it moves up to $30, $35, and then my trailing stop follows it up. And if it comes back down, initiates that trailing stop, I can almost guarantee you 60 to 75% of the time it's going to come right back down or really close to the price that I initially got in at. For some reason, I get into stocks like that, and it'll do that. Like Rocket Mortgage has done it that way for me, and Pets has done that for me. I mean, you can look here at Pets. I mean, look at how this thing just look at this, up and down, up and down, up and down. You know what I mean? So, I've gotten in at $29 multiple times, gotten out at $30 multiple times. And if I make $20 each time, it's fine because I did it how many times? 5, 6, 7 times. And the catch though is in reference to my Roth IRA lecture was every time you get in a position, let's say you start with 1,000 and then you get in, you make $50, $60. That next time you get in, you got to grow it a little bit. You got to get in with 10, 20. You know what I mean? Like, so your money only compounds when you compound the next entry, if that makes sense.
Yeah, that makes sense. Thank you. Appreciate it.
You're welcome. Okay, somebody else had a question?
Sure, I have a question.
Okay.
Can you pull up CAR?
હા એ પણ સારું છે. એટલે એમાં બધું મેઇન છે.
I wanted to see what you thought about a $45 strike call.
What expiration?
$115.
I mean, there's a chance that COVID news is going to make this go. It's in an uptrend. Not a very strong one, though. It's more neutral than bullish, but there is slight bullishness to it. I mean, let's see. This area is strong, but then it goes neutral. Right. So you've got it bouncing off support quite a few times right here. You got resistance right there. I'd say if it breaches this resistance and stays above it, then that 45 strike's likely. If you're going to try to get into this, if you can wait for it to hit this support level down here, that would be a better entry. And the way I look at these types of plays is I don't like to chase. I like to get it at the bottom. I like to get it at support. Because if you get it up here, like let's say tomorrow morning it's same price and you get in, and then it comes down to support. Right? If you don't get in and then it goes above this resistance level, it's still a good entry because if it stays up there, then you know it's going to keep going. All right? But if you get in and then it falls, you're just, you know what I mean? Like you want to either get it down here or you want to get it above here, but you don't want to get in anywhere here. Does that make sense?
Yeah, I guess, and then a question to that would be like, isn't it kind of uptrending a little? So like, what if it just doesn't drop and then I lose my opportunity? Or are you saying it's less riskier to invest in something like this is just kind of like your thought process as you look at the chart? Like, I'd rather it go down to this support level than go into it at what point it's at now, so I'll just look on to the next ticker and see if I can find something a little better.
Well, it's either that or it goes above resistance and breaks out. Because once it breaks out of resistance, then it has strength, right? And as long as the volume is there, you're going to continue to see the volume at least for the next, half a day at least, right? I mean, let's see if looks like that's all-time highs too. Oh no, it's not. Let's see if there's any resistance. There's no resistance where it's at. You've got resistance at well, let me rephrase that. There's resistance currently where it's at, but if it breaks out of that level, you look for the next resistance point, and I would say that's going to be like 41.75. Strong. Well, maybe not even strong because this area doesn't look very promising resistance. You know what I mean? Like up here looks a lot better. 45.66. So I mean, basically what you need to look for is don't get in. Let me get back in here. Don't get in at the top of these 2 points. You either get in at the bottom or you get in after it breaks above it. If it breaks above it, then you've got until basically right here, right? And I know that's not a big stretch, but at the same time, it's weak. It's a weak resistance. So if it breaks above the current resistance and comes to this one, I believe it'll break through that one too. And then you're looking at the 45.60 area, which is going to be up here. You know what I mean? So
Yeah.
that's how I look at that. I don't like being in at the high of the range. I like it to break out of the range. Then you've got strength and volume moving up, or you get in at the bottom of the range and wait for it to test that resistance level again. Does that make sense?
Yeah, that makes sense.
Okay.
Thank you.
You're welcome.
I also have another question. So after listening to your Roth IRA lecture, I got super interested in like changing my entire way of investing and doing more like swinging shares and playing indexes and compound interest and all of that jazz. So I was just curious, like, what percentage would you recommend, like, of your paycheck that you get from your day job do you invest like on a monthly basis into your Roth IRA or not even a Roth IRA, but like just into stocks in general?
I max out my Roth and my wife's Roth every January. So I don't really look at percentage of my pay because I guess you could say I'm beyond that. I don't really have any debt. I've got bills, but my bills are covered, within the first 2 weeks of my pay, right? My first paycheck covers my month's bills, and then my second paycheck is, I'd say half of that's for food, and the other half I can save. I guess the important thing to understand and note is, I guess what's the question you need to ask yourself is, how much can you save every month? Out of your paycheck, what are you able to set aside, right? And then out of that, let's say you make $2,000 a month, and it costs you to survive, pay your bills, whatever, $1,000. You got $1,000 left. Out of that 1,000, how much of that, like, is there something that you want to buy for yourself? Is there something that you've been kind of pushing off that you need, but you don't really need to survive, but you're going to need it sooner or later? Like, you got to prioritize the things that your money goes towards, right? For me, my priority is Roth, because everything else for me, I'm not interested in buying new gadgets or that kind of stuff. I'm 37 now. I've got a daughter and my wife. I provide for both of them, so my income's not for my personal wants anymore, right? It's survival of my family. So, I look towards the Roth to provide that for me when I'm too old to work or when I'm tired of working. That's where my mind is. So, unless you're willing to tell me all the stuff that I just went over about yourself, there's not really too much I can tell you other than the generalized information I've just given you.
No, I totally understand. Thank you. I definitely understand, actually.
You're welcome. All right. Awesome. Sky, did you have a question since you wanted to be unmuted?
Yeah, I was just gonna ask, was that the watch list for the coming weeks? Or are those just some examples that you added on the watch list?
What watch list? On my screen?
On your screen.
Well, these are just things that I trade periodically. I keep
Oh,
an eye on
that's your
those daily.
personal watch list?
Yeah, I mean, I look at these daily.
Okay.
Yeah, I mean, a lot of this I have money in, a lot of it I don't, but I trade constantly because I just pay attention to it a lot.
Mm-hmm.
Like Netflix, I'm waiting for it to come down here under 480 to get back in something. Let's see. LMT, I actually missed my entry under 360.
Okay.
I would like to have gotten it right here end of day Friday, but I don't know. I wasn't watching the market. I should have been paying attention. That would have been a good entry for me because under 360 is my number for the stock, and it fell below that. Right. So I mean, if I look further out here, you can see this is the 360 level. So that 360 is where I start watching and say, all right, now I'm waiting to see when this thing hits a low, and 354 was its low. That should have been my key point. And typically, when I see that happening, I kind of pay attention to, all right, what time of day is it? Is it at the end of the day? Is it Friday? Perfect for me because I'm an option seller. So theta decay over the weekend is benefits me. And the reason I chose 360 is because if you see here further to the left, I got these 2 points or sections really, and this one here. Those are all right at roughly at 356. So I like to start paying attention before it gets to support. Right. So once it does get to the support, then I can determine, all right, is the volume picking up and seller volume, or is it decreasing? That's when I need to get in. If it's decreasing, it's time to get in. If it's picking up, then I'm gonna wait it out until the end of the day, for example. I wasn't around on Friday to do that. Right? That is Friday, right? Yeah. I wasn't around on Friday to do that. I don't know what I was doing. It was probably something my wife had me doing. So yeah, this is my usual stuff that I play. I mean, I've got things that I'm interested or invested in. Like right now, these are the stocks I'm invested in. I'm not invested in Zynga or AGI. That's just stuff on Webull that Webull gave me, so I kind of added it in there. But I've got money in the rest of this stuff, right? So, and GNUS was a bad play for me. I've averaged down on it, so my break even's 169. It's actually went to 178 at one point. I got sell order at $2, so that one's going to exit soon for me. I'm thinking. If you look at the last 30 days, I mean, this is just an uptrend here. So at some point, I'm going to see profits on this one within, I'd say in 2 weeks, I'll be at my profit target. So I get to finally get rid of that crap.
So if you see like the cup and handle forming on the graphs, is that usually a sign of an uptrend, or does that
Absolutely.
also mean it's usually an uptrend?
This right here is a cup and handle. This right here is a cup and handle.
Mm. So I see a lot in the chat. VERU is a ticker, and it's forming a cup and handle. And it's resisting the price of, I think, like 750 or something. But it's supporting around like $5.
That's not really a cup and handle.
No.
This is so a cup and handle, like look at this again. This particular one here. Look how this is. Both sides of the cup are relatively the same height, and then you've got the handle that goes sideways. Same thing here. The both sides, the downward and upward movement are relatively the same height, and then you've got a handle. You see that? The one you're talking about,
Yeah.
it does not resemble that. I mean, it's if the green stopped right here and then went sideways, then I would say yes, cup and handle. But this is that's like a hook, like a fish hook or something. Not really far from a cup and handle. I mean, it's not to say it's not bullish. That I don't know. I mean, I don't even know anything about this company, but I'm not seeing a cup and handle on that one.
Okay.
Okay. Was that it?
Yeah, that's it.
Okay. All right. Who's next?
Hey,
Hello, can you?
just kind of getting into this and starting to get familiar with technical analysis. I see at the bottom you have MACD. What other technical analysis? What are they even called? Technical analysis.
Technical indicators.
Uh,
So I use standard deviation channels, which is on my chart. I don't really use MACD. The only time I pay attention to MACD is, let's see if I can find a good example. Sec here. This could be a good example right here. When it's really far apart from the two lines, are really separated, I like to catch it before it starts doing this drop. And when I see this spread apart like that, I want to see things like this, peaks. So basically it'll be before market opens. It's at its peak. Same thing here. It's really far apart and it does start its fall. But I don't use this to find that. I look for stuff and then I look at this and say, all right, what's the MACD look like? It's not necessarily a yes or no indicator for me. It's more of a, okay, that confirms what I'm looking at. That confirms what I see. Let me see if Tesla. So here's a good one. Another thing is you got to note, what is the stock normally doing? Like Tesla is a bullish stock, right? So when you see the MACD come down below this purple line, I guess, and it's far apart like this, that's a good indicator. It's probably going to start coming back up.
all right, thank you.
You're welcome.
Hey, Hostile. I have a question regarding a PayPal option.
Okay. What's your question?
So I got in, this was on November 16th, so this is almost a month ago. So I ordered $260 PayPal call that's going to expire January 15th, coming into this next year, 21. And my question is, like, do you think we could see sort of like, I guess, some type of, I guess my question is, just since it's almost a month or halfway through my contract from when I originally bought it, I know Theta is going to start, impacting a lot of my trades. So do you think that, this coming week, as it is through my halfway point of the expiration, that I am looking to sell off? And I obviously did make the mistake. I think it happened like 2 weeks ago where I did have a nice return and I didn't take it. I was in class for something else during school. I forget when it was, but I guess part of my question is sort of like, what are your thoughts on this like specific call, especially since this week is going to mark, that halfway point for my contract?
I think it's bullish in the sense that as long as it stays above that resistance line.
Do you think that
it needs to stay above this?
Yeah.
So
do you think that? Sorry, go ahead.
I was just gonna say, if it falls below that, you might want to get out.
Do you think if it has a bullish uptrend, like if it starts maybe rallying in some type of way, like tomorrow morning, do you think it would also be a good time to get out during that day, just because it's looking green, it's staying green, and that way I'll have some return on my investment?
Well, at this point,
Say what, bro?
At this point, I would say that you probably want to try to get out with at least what you got in with, right? If you can take a little bit of profit, that's even better. But at this point, you're just you're trying to manage your risk, right? You're not trying to make money. Now you're trying to manage the risk, and the risk is losing money, right? So you want to manage that and make sure that you don't lose. So you're gonna have to pay attention to this like a hawk.
Yeah, no, absolutely. I definitely made the mistake 2 weeks ago. Like, I originally bought the contract at 62 cents, and I think it was 2 weeks ago, or maybe even last week at the beginning of the week, it had a nice pop, and it was at around $1 and maybe 8 cents or something, and I realized I should have taken it where I saw it. So it's definitely something I do need to watch a lot tomorrow.
Yeah, especially when you're far out of the money like that. I mean, that's actually a really good return that far out of the money.
All right. Thank you so much for the answer and for all your help and support.
You're welcome. Okay. Who's next?
Hello, can you check the MMEDF for the long-term shares?
MMEDF?
Yes, sir.
This is a new stock. I don't like new stocks for long-term shares. It's also at a high. So unless you bought at the high and you're currently in it, you kind of don't have a choice. If you bought down around $1 and you're in it, then now's a good time to get out. But long holding
it's gonna be bearish soon.
What's that?
Is it gonna bearish?
I'm seeing bearish. But there's not enough information about this company out there as far as chart analysis for me to tell you if it's a good idea to hold long term or whatever. I mean, you're going to have to look at the fundamentals of the company and the future outlook of them to determine if it's worth holding long term. I never ever go long term on anything. So that's not really something I ever pay attention to. I don't look into the fundamentals of the company. So if you're interested in long term, that's something you're gonna have to research, or I would recommend you research.
Oh, I see.
Excuse me, Crystal. Is my card?
Also, when the quiz is coming though?
What's that? When is what?
The quiz for the premium floor.
Quiz?
Yes, the quiz.
I don't know what that is. How do you spell it?
QUIZ.
I think he's saying quiz.
Oh,
There's a
quiz.
quiz for the premium floor to be able to.
Oh.
Yeah.
Tilio makes those. I think it's every other week. So I don't know. I honestly don't know the answer to that, but I think it's every 2 weeks he does that, or maybe once a month. Typically at
Once
the
a
end
month.
of the month. Yeah.
In a month. Okay.
Send a message to question bot. Say @question bot and then ask that question, and Tilio will he'll probably respond to that.
I see. Thank you, then.
You're welcome. Okay.
Hey, Victor, I have a question.
Whoa.
So, sorry.
You're really loud and very hard to understand.
Oh my gosh. Okay, I'm gonna test this. I wasn't sure. Is that too loud?
It sounds like your mic is like in your mouth.
I don't know. Actually, it's right now as well. Hello.
Can you
not be on speaker? Yeah,
Use like a microphone. Not like a laptop.
not like a laptop. Yeah, I think that's right.
Okay, while he fixes that, who else has questions?
I have a question. Do you use Cheddarflow?
I don't. I think Joe uses that, or maybe
Oh, okay.
Arctic Engineer. One of those guys may. Maybe
Okay.
VCAV. There's somebody in support that uses it. I'm just not sure which one of them does.
All right.
Okay, I'm here. How about now?
Much
Is it
better.
good?
Much better.
Oh, I'm sorry. Now I'm actually on a phone. Previously, I was on a laptop. Okay, so I did look at your, Roth IRA account, and I think I really like that. And so my question is, so how can I invest in Roth IRA account? So should I invest like stocks like a SPY or like something else? So I mean, how this Roth IRA stock account works? So I just need, because I don't know about much, so it would be great if you can like elaborate a little bit so that I can
So
go.
it's like
Yeah.
any other stock brokerage account. Okay,
Okay.
it just has the Roth retirement rules surrounding it. So you can trade anything. You can do stocks, options, indexes, mutual funds, probably annuities, bonds, T-bills, whatever. You can do any of that. The way I use mine, I buy equities short term, as short term as possible, and I sell them with profit. And then I try to continuously do that as many times as I possibly can in the shortest period of time. I don't want to hold anything very long, because the longer you hold, the less chance you have to realize your profits. Does that make sense? Does that help answer your question?
Yeah, that type of question. So one question, I mean, sorry. Okay, so I understand you do short term. So do you go for, I would say, penny stocks, or you just go for like I would say like Apple or maybe SPY or maybe something else?
Well, I don't touch
And what is
ETFs or indexes. I don't touch penny
okay?
stocks. I like
Okay.
to do things that are well-established companies. I don't want to get into
Like
something that could, next week file for bankruptcy,
yes.
because then I'm screwed. All right, I want to avoid those kinds of things. You want to avoid the stuff that's going to negatively affect your long-term retirement account. So even though the account is long-term, your trades don't have to be, but the stocks that you invest in need to have long-term solvency, right? So if you look at my
Right.
watch list right here, Apple, Adobe, Akami, AMD, Amazon, BA, Bank of America, Citi, Chipotle, Costco, what's the name of it? Canadian Solar, Deere, Exelon, Expedia, Gilead, Skip GNUS, that one's trash. Barrett Gold, Halliburton, IBM, Johnson Johnson, Juniper Security Systems, JP Morgan, Lockheed Martin, Las Vegas Sands, MetLife, MGM Studios, Altria, Moderna, Microsoft, Netflix, NetApp, NVIDIA, Oracle, Pets. The list goes on. Procter & Gamble, Royal Caribbean, Rocket Mortgage, Roku. Even Roku is kind of sketch. I really don't trade Roku. Rackspace, Starbucks, Siemens, TripAdvisor, Tesla, Twitter, Uber, Visa, Walgreens, Workhorse, Walmart, Slack Technologies, and Yum Brands. These are all, majority of them, I'd say 90 to 95% of these companies are long-term solvency companies. They've been around a while. They're well established in the market. And what I mean by market is consumer market. They're out in the world. They've been around for at least a decade or two. They have a ton of data behind them that I can look at the chart and make solid analysis on support and resistance levels. And then I can determine when to get in and out of stuff. Penny stocks are way too risky. You know what I mean? So ETFs, there's a lot of things that go into that. So I don't necessarily like those either. Indexes, again, too much that goes into it. I like to stick to one stock. An ETF or an index has multiple stocks inside of it, so it can have a funky day, even though some are doing really well. I like to just kind of concentrate on one particular equity. So that's what I trade, how I trade. I'm not interested in trying to make big money. I'm interested in trying to make consistent returns and build the account so that over time it grows and that 2.5% return grows with it. You know what I mean? So 2.5% return today could be $20, but in 15 or 20
Yeah.
years it could be 200,000. So
Makes sense.
you stick to that percentage, and at some point your account's just going to grow and grow and grow. And at some point you're going to be making 10,000 every trade, and then 20,000 and 50,000 a trade, and that be your 2.5%, right? I mean, what's 2.5% of $2 million? Let's see.
I think it's
50,000.
50,000. Yeah.
$50,000 for just 2.5% return.
Makes sense.
So that's what I mean when I trade my retirement account swinging shares. I try to get a 2.5% return total on my account. So like right now, I've got two of my accounts are $25,000 each. That's $650 a month that I need to make to maintain that 2.5% return. Right? So
Right.
it's not as easy. It's not easy, believe me. So that's why I put together both the monthly 2.5% return spreadsheet, and then I came out with a revised version where it has the annualized 30% return a year, which is 2.5% a month. Right? So it's more realistic to get a 30% return a year versus 2.5% return every single month, because your timing is, you can't be perfect with timing. So if you get into something and it's just having a bad month and you get in a little too soon, now you've got to sit on it for a month and a half or 2 months. I've had to sit on positions for 2 months before. So I'm not able to consistently do it every single month. It's great if I can, but it just doesn't happen that way. So what does happen is if I hold something for 3 months, I might get a 40% return on that. Like Tesla, I've been holding it for what, 2 or 3 months now, I guess. Let's see. When did they split? So I've been holding Tesla since I kind of bought in somewhere here. Let's see. Somewhere here when it was rising. My break even was
Yeah.
390. So ever since it split, basically, is the time frame that I'm talking about, right? So September, October, November, right? End of November, I've been letting shares go since it went to 550 and up. I've been letting shares go. Right, so I've been holding it for 3 months or so, and now that I'm starting to let shares go, my return is a lot bigger than like these 3 months. Had I only made 650 each month, that's great. But now that I've held Tesla for 3 months and I've had how many shares I had? 75 shares. It's a lot of money, right? And
It's a lot of money, yeah.
I've unloaded. I think I got 30 shares left, 35 shares left, and my account from that alone has increased double as far as the percent return. So if I didn't have Tesla and I was just doing everything else, I'd probably be at about a 55% return for the year. But because I have Tesla, I'm at like a 90% return for the year. So it doubled my percent return almost. I think it was 45 to 55%. It's hard to know the actual percentage number without going in and calculating it, but it's somewhere around 45 to 55% total return on the account for the year. Right? But because I held Tesla for 3 months, I was able to increase my account's annualized return to 90% or 85% instead of 50 or 60. Does that make sense?
Makes sense. So one other question. So do we have to pay any kind of tax, like maybe a yearly tax on IRA account if
No.
we does that? No. Okay.
Not a Roth, no.
So is there any a time period so we can withdraw money at any time, like whenever we want from IRA account, or it just have to be like a certain amount of time to withdraw the money from IRA
So the
account?
first thing is you can't withdraw profits until 59.5. You can withdraw contributions anytime for whatever reason. But once you dry up your contribution amount, then you're going to get taxed and penalized until 59.5.
So okay, if I understand correctly, so I can't withdraw my profit, but I can withdraw the money I invested.
Yes, the contribution. So if this year or next year you put $12,000 total of contribution and then you make $12,000, so your account's at 24, you can withdraw 12,000 without a problem.
Okay, makes sense. Does make sense. Oh, I think yeah. Thank you. So one question. I mean, it's not like I ask so many questions. So another question is, so what are the stocks you currently doing in your IRA? I mean, so you doing Tesla for sure, right? But what are the other stocks? Can you provide a list of stocks so that we can have a look and then we can make our own judgment and decide we can buy these and make our IRA account good,
All of these right here is what I pay attention to and or invest in. Everything here on my screen.
Okay, so I'm gonna do a screenshot of this.
Well, I'm recording this session, so feel free to rewatch the session too.
Okay. I think yeah, that's great. Thank you very much.
You're welcome.
Appreciate that.
You're welcome. Okay. Who's next?
What is Ivy Crush?
That's when implied volatility comes down drastically and your contract price falls negatively quickly.
When does it usually happen?
Typically when there's high IV. There's no real way to pinpoint why or when it's going to happen. It just does sometimes. No real way to determine that, other than like if Tesla's IV is 200. I mean, I guess typically you can think about it as a volatility and liquidity thing. Who's making that noise?
Thank you.
Also, if there's more certainty about the stock, that could lead to IV crush. All right, so what builds IV is uncertainty, high liquidity and volume, and volatility. Right, so the opposite of that is going to be the IV crush.
Thank you.
You're welcome. Okay. Who's next?
I had a question. If you could do a technical analysis on AMD.
Broke through its trend line, set a new low from its previous, at least. It might actually be bearish.
Bearish?
Could be.
Oh,
It broke through that
that's
trend
not.
line.
Yeah. I actually have a call for it's a 103 call for 1231. I'm deep about 12 contracts, and I was wondering if it was going to be bullish and tread upwards by the end of the year.
I mean, it could. Just kind of looking at its previous movements, like this one, right? I don't know that it's kind of like a broken head and shoulders here. It's tricky, to be honest, because the short term, very short term, it's setting higher highs. So it created a lower low, and then now it's setting higher highs. What you got to really pay attention to is what is it going to do if it reaches the $93 level? Is it going to continue past that, or is it going to reach resistance and fall again? Is it going to have trouble getting through that point? This is another one of those where it's at a point that's hard to really tell you any kind of direction, because it's kind of contradicting itself. It set a new low, but then it created, after that, two little higher highs, right? So
If you knew that there were a bunch of institutional buy-ins, would that affect your opinion on if it's bearish?
Well,
like a bunch of blocks?
long term, no. I mean, sorry, long term, that would make me think it's bullish. But there's a short term time frame and there's a long term
Like
time
for
frame.
the end of the month. 12/31 calls.
Mm,
I was trying to do the whole like follow the big money thing. So I'm balls deep in AMD right now. But
the problem with that is you don't know which side it is. You don't know if they're shorting or going long. You just know that somebody's in that strike for that much.
yeah.
So you don't know if they're shorting it or not. So that's why that's scary. That's why I don't use that, because you have no way of knowing if they're bullish or bearish, right? You just know that somebody is in that particular contract strike for that much. You just don't know which direction.
Right.
So that's what makes that dangerous. Okay. Does that answer your question? Any more?
Yeah.
Okay.
Yeah, I'm good. Thanks.
All right. You're welcome. All right. Who's next?
Could you look at Nvidia actually?
Sure.
I don't know if you remember like back in September, the whole thing with SoftBank and the Nasdaq whale. There was like a huge sell-off. I think on like the 3rd or the 5th or something. But it was just like rallying a bunch and then it dropped. And now like I don't know if iron condors would be a good idea because it like kind of seems like it's trading sideways, but they just like loaded up on a bunch of calls again, so I don't really know. SoftBank did. So like I don't know if I should like do iron condors or like wait for the next pullback and then just buy the dip.
So I thought you wanted me to look at Nvidia. So it's SoftBank. What's the ticker for SoftBank?
Let me see. I think you could type in SoftBank. SFTBF.
Doing shares?
Yeah.
You in it now?
Like I have, yeah, I'm in it.
What's your break even?
I don't have like a lot of shares. I have like 20.
What's your break even?
Um Oh, I'm sorry. Let me just find my phone real quick.
Okay, while he gets that information, who else has questions?
I have a question.
Okay.
As far as swing trades, what are something you look for? Look towards when you're looking for a swing trade for the next day or something like that after hours. I know the market doesn't move after hours, but if there's a certain thing you want to look for, like a bears in golfing or something like that, or I mean bullets in golfing or something like that before the market closes or something like that, or on the day candles or something like that.
No, I don't. I only look at support and resistance and trend for swing shares. I don't
Okay.
necessarily look for chart patterns or candlestick patterns. Um, I'm not saying they don't work. It's just they're hard to spot, right? I mean, I could set up a scanner to find specific chart patterns. That'd be the easiest way, but when I've done that, it's a 50-50 type of thing. Like TOS will scan and find chart patterns, but they're not 100%. It's like a skewed version of it, and I don't like that. I stick with support, resistance, and trend. I look at 180-day charts, 4-hour candles, and that'll help me find strong support and resistance levels. And I mainly just trade support. So you're not going to be able to find. See this big list that I have here. Let's see. I said it's 30 to 45 tickers. Out of all of those, 2 or 3 might be something at a good level to get into. LMT is actually one. Yeah, LMT. I think LMT is at a good one. I just recognized something. Let's see. So actually, I do like seeing these types of patterns. Just clean this up a little bit. Actually, I don't need to clean that. So I like to see things where it's doing this downward motion, but then I've got a sideways support level. That means there's strength on the bottom and the selling pressure is weakening. I like to see that. So this might have a breakout soon. So I mean, this one I think is at a fair price, pretty decent. Down here at under 360 is a really good price. It's at 361. So I mean, like I said, I missed the entry on this for credit spread, but shares, I think this might actually be a good position to be in because it's hit a high up here. It's got some pretty good resistance levels between 390 and 400. Has, I'd say, some okay resistance at 380. So I mean, this one's good. Like I said, 360 and up is good price for LMT. There's something else that I had that was a good one. Can't remember where it was. Pets. I mean, Pets at 29 is great. Rocket at 20 is great. Workhorse, I think it might potentially have a breakout in the next month or so. So I think that's a good price, 21.78. I mean, I'm really seriously considering getting into that. Maybe a couple $1,000 worth. Or I might start with 1,000, hope it drops, and then get in more, stuff like that. Netflix is the other one that I like a lot. Down here at under 470 is when I'm gonna start really paying attention to it. So I mean, I don't. Hopefully that helps you understand how I look at stuff, right? I mean, exactly what you see here is what I'm looking at. I got my support resistance lines. This is my 180-day chart, 4-hour candles. You know, I look at these particular tickers, and I say, all right, these are good entries, right? I mean, I'm at low support levels. I mean, you can see that I've drawn out some of this LMT here. See, I mean, it bounced right here on Friday. So, I mean, that could be another thing with this is you got it's kind of actually having trouble getting past that point. So to me, that says that we might see it drop again. It might pump for another day and then come back down. Maybe not. I mean, it might have trouble there and fall back again down to 350 this time. Now, that's what I'm actually hoping the LMT does. But that's what I look for. Does that help answer your question? Okay. I will take silence as a yes. Person that was asking about SoftBank, is that Ape? Did you get that information? Break even number? Okay, I'll take silence as a no. Who's next? Who else has questions?
Regarding the traditional and the Roth IRA.
Okay.
So right now I can open Roth, but seems like pretty soon, maybe next year, I would not be qualified for the any kind of contribution. So let's say this year, according to my income, I would be able to open and would be able to contribute in 2021, but in 2022, for sure, I would not be. So like, would they ban my account, or I can just use my 6,000 whatever I have contributed on the very first year, and whenever my income drops below their max, I think cutoff income, I can again contribute. So like, does that work like that way?
Yeah, so you just won't be able to contribute to it. You can still do whatever you want with the account. You just won't be able to contribute to it until your income falls below that number. So, I mean, are you married or single?
I'm married, and I'm going to file jointly, and me and my wife, we both are working. So this year she was on the maternity leave, so she would not be she was not able to work. She just started, so probably next year we both would be full-time. So my concern is 2022 I would not be able to contribute, but 2021 when I open account, I falls below the max, I think, income limit amount. So
Do
first
this.
year would be able to contribution. Yeah.
You can get $24,000 in.
Okay.
So open up an account for her and you. Right? That's number one. Number two, you can contribute 6,000 to both accounts for 2020. Come January 1st, you can contribute another 6,000 for both accounts for 2021.
Okay, so I should hurry and open the account before 2020 ends.
Well, you've got till April 15th of next year to contribute for 2020. But yeah, I mean, I would, if you're worried about her going back to work and all that, I mean, I'd say contribute as soon as you can. Do it right now. You know, sign up for both her and you. Open up an account for both of you, and then put 6,000 in each. Come January 1st, put another 6,000 each, because she's not working yet. So you know, if something does pop up, you can say, well, she wasn't working yet, and we contributed. And you know, if she's when do you plan on when does she plan on start going back to work?
She already started. It's been a couple months.
I see.
So 2020, she didn't work for almost 10 months. She started back in October. So her income would be like 3 months, October, November, and December for 2020.
I see. Still try it. I mean, the worst they can say is, you know, you exceeded this or that, and you know, I honestly don't know what happens. I know that when you file taxes in 2022 for 2021, if you've exceeded the amount, I'm sure they're going to say something. But you know, it's not going to be a big deal. You can just act like you didn't know, right? If you're really
Okay.
concerned about it, if it's something serious or if you think it's something serious, then I would call Charles Schwab or whoever you have your Roth IRA with and ask them that particular question. But let's just assume for a second that you can't contribute for 2021 in both Roths. Open up 2 traditional IRAs and contribute to those instead. Because the moment that you can, the moment your total income falls below that max number, then you can start throwing money back in the Roth. But while you can't, you can throw money in the traditional IRA. Now, if you're, let's say, I think it's 213,000 for a married couple. If you're at say 220, ask the question to Schwab or whoever the broker is. I use Schwab. I keep saying Schwab. Ask the broker, say, hey, look, if I invest 6,000 in 2 traditional IRA accounts, and that lowers my total taxable income below that max threshold, now can I put in my Roth account? Does that make sense? So you might be able to finagle
Yeah.
it that way. So you can probably contribute to both if you're
I researched and I like kind of found that there is a loophole that you can open traditional if your income is above their the max income bracket. So you can transfer from traditional to Roth whenever your income falls below that, and you just need to pay taxes. There would be no penalty, and you can start contributing in Roth instead of traditional. And you also can do vice versa from Roth to traditional. But I'm not interested in traditional as they are also charging 10% penalties, and I have to pay taxes. So like same thing with the Roth, they are charging 10% penalties, but after 59 and a half, there would not be any tax on my gain. Instead, traditional they would charge taxes, and if I decided to withdraw, there would be penalty, same penalty as Roth. So what is the point that I would go with traditional?
well, again, the only reason why you'd go with a traditional is because you can't do the Roth, right? And in the future, when you're not making that much money, let's just assume that you won't when you retire, then you can roll over that traditional money into the Roth, and you're going to pay tax, but not the penalty, right? So if you want to keep
Yes.
contributing to your Roth in the future when you're not making as much money, you can, instead of taking the money out of your bank, you can take it from the traditional IRA and throw it into the Roth and just pay the tax on it. That's why I'm suggesting that if you can't contribute to the Roth, then do it to the traditional, because at some point in the future, you might be able to take that out of traditional and throw it into the Roth, right? And also, this is a question that I think you should definitely ask. I mean, hell, I might ask it because I'm interested to know this answer. Um, if you're at two and a half, let's see, let's say you're at $220,000. The max is 213. That's a $7,000 difference filing jointly, right? So you're $7,000 above the maximum allowable limit for a Roth. But if I contribute 12,000 to the traditional IRA, thus lowering my overall taxable amount down to 208,000. Now, am I eligible to put money towards the Roth? You see where I'm going with that?
Yeah, that's a nice point. Like kind of we can find the loophole if it's worked that way.
Yeah, I
That
mean,
would be a nice loophole to get in. Yeah.
I think you can. I really do because the IRS is interested in your total amount that you're taxable on, right? So
Yes.
if you're able to write stuff off, that lowers your taxable amount, and then they can't say, well, you're over the taxable amount. So you might be able to do that. Now, I don't know if they just look at your gross pre-taxable amount and say, okay, before you wrote stuff off and before you did this and before you did that, this is the number we use to decide whether or not you're eligible on a Roth. So I might ask that question myself because I'm interested to know that answer. And let's assume for a second that you can. Right? Let's assume for a second that you can contribute to the traditional IRA. It lowers your taxable amount and allows you to throw money at your Roth. Well, let's also assume for a second that you make, let's see, 225,000. So even if you were able to do that, you still can't get below that $213,000 number. In that scenario, if you got a high deductible health plan, you can invest in a health savings account and put $7,000 towards that and thus lower your total taxable amount, because you can write that off the same way you can write off a traditional IRA contribution. I also believe a health savings account is hands down the best health account you can have. You got a high deductible health plan for emergency things like, real drastic expenses, something that costs $100,000. That's where the HDHP comes into play. But the smaller stuff like eye doctor, regular checkup, well, even regular checkup is free. But if you got to go to the doctor, you're sick. You got to go to the doctor. You got the flu or something, or you break your ankle and you go to the doctor. You're gonna have to pay for that out of your pocket. Because the high deductible health plan is going to cover you after 10,000 or something like that. But so, for example, my healthcare is Aetna, and with Aetna, I've got a high deductible health plan. I pay $30 a month or $60 a month for 3 people. We get free yearly checkup, and my dental's separate, but I pay $60 a month, and then I put money towards my health savings account, right? And so how that works is with Aetna, at $2,500 out of my pocket, they start covering 50%. At $5,000 out of my pocket, they start covering 80%. At $7,000 out of my pocket, they start covering 100%. Right? And this is per individual. So I would need $21,000 in my account, and if all 3 of us had to go and spend $7,000 on healthcare, all right, I would need that in my health savings account. The beauty here is that's usually not the case, right? And every year I can contribute to my health savings account up to $7,000, and I keep my money. Whereas if you're in a PPO or a expensive health plan that covers majority of stuff, you pay $500-$600 a month for a family of 3. That's $8,000 a year that you don't get back. It's gone. So my health savings account, I can put that same amount of money every month and I keep it. It's mine. And I get to spend it on anything health related, tax free. And I write that contribution off of my taxes. Right? So if I go, it doesn't matter what I do, healthcare related, I can pay with this. I have a debit card for my health savings account. And I go and like if I go to the chiropractor, regular healthcare doesn't cover that. My health savings account does. If I go and let's say you've got a expensive healthcare plan and you need some medication, some amoxicillin for wisdom teeth getting pulled. You go to the store and you're gonna have to pay out of pocket for some of that, 20, $30. It might cost $100 or whatever the price is. You're gonna have to pay out of pocket something. My health savings account, it's covered, right? So that's why I love the HSA so much, because I get to keep my money. I don't just pay these idiots money on end and never get to see a dime of it. If I don't go to the doctor at all this year, my money's gone. But now that I got a health savings account, it's mine. It stays mine. And the goal is to get to 21,000 or maybe 30,000 just to be safe. $30,000 in that account, and then I don't ever have to contribute towards it again until I go below that $21,000 number or something like that. So, and with that being said, with that all of that accounted, it's a $7,000 write-off a year if you can contribute that much.
So like, is it within your Roth account?
No, it's separate. It's a completely separate. You got to get it at a bank. Some banks offer health savings accounts. You have to be in a high deductible health plan. You can't have, at my work, it's called a PPO, a premium paid option or something like that. So it's PPO and HDHP. You have to have a HDHP. If you have PPO or something like that, then you can't open a health savings account. You can't contribute to it. So you must have high deductible health plan before they'll allow you to contribute to a health savings account.
Okay. I have lower deductible, and max out of pocket is not much, but I do pay 900 a month for
Oof.
family plan.
Yikes. That's
Yeah.
expensive. How many people do you
Huh?
cover with that?
Me, my wife, and my son, 3.
That's insane. You should totally cancel that trash, get a high deductible health plan, and start putting $900 towards a health savings account.
Yeah, we'll look at. I just signed for 2021. We were paying somewhere around 300, and actually that paid me off because I had a ACL surgery, and we had a baby. So, and unfortunately my son born premature, so like he was in NICU for months. So like that paid me off
Yeah,
the
yeah,
lower
that would definitely cover it for
max out
sure.
of pocket. Yeah. So like that's why I liked lower deductible and lower max out of pocket, because it saved me hundred thousands of dollar if I have went through. Like they offered me somewhere around 15,000 max out of pocket for my wife. I mean individual wife, my son, and for me. So like 3 of us went way more than the max out of pocket. So like I would have ended up paying $45,000 last year if I would have taken that insurance instead of lower max out of pocket.
Right. Well, so there is a
Yeah.
particular time where it's more beneficial to have what you're talking about, right? And your wife being pregnant and then having your baby prematurely, that's absolutely a better time to have that type of plan, right? But now
Mm-hmm.
that you're out of that, right? Now that that's not an issue anymore, I mean, unless you plan on having another child, I would suggest going with a high deductible health plan and a health savings account.
Good. Would consider that. Thank you so much for this point.
You're welcome. Okay. Who else has questions?
Sup, Hassa. How important do you think it is to have like a profit loss sheet slash chart?
Um, I mean, it's accounting, right? I mean, it'll help you understand exactly your realized gains and losses. Um, it's organizing yourself. I mean, anytime you organize something, the better off you are, in my opinion. So it's definitely a good thing to know, or a good thing to have. Um, I don't have it because I only do shares. With options. I mean, I do options in a margin account, but it's not really. I just kind of trade here and there. I'm not too deeply invested into options like I am my Roth, and with my Roth, I have a profit loss um, thing on Schwab where I can see pretty easily where I'm at. But it's never a bad thing to be organized.
Got you. Thanks. Another question. What like? Do you have any tips on like how to reduce your emotions while trading? You know what I mean by that? Like
Yeah,
yeah.
limit exit orders. Like if you're buying options, set a limit exit order for yourself. That way, if it crosses it, it initiates. You don't get to choose. If you can automate stuff, you remove emotion with automation. Same thing with me. Like when I do shares, um, I'll set limit entry orders instead of going, well, do I think it's gonna um, go above this or go below this? Rather, instead of me guessing, I'll just put in a limit order for what I'm happy with. And then if it does, it does. It doesn't, it doesn't. Whatever. And then if I do get into it, then I'll set a limit order with a trailing stop at a good level where I'm content. So that way it makes a decision for me. I've already predetermined the profits. So if you can automate stuff, and you will essentially remove emotion with automation.
Got you. Thank you. 'Cause I tend to have a problem of like changing my exit order. So I
I
guess I'll
understand that.
start doing that, setting myself like with keep a limit so I can get like solid profits. Appreciate the help, man. Thank you.
You're welcome. I mean, also have a percentage in mind and stick to it. Don't deviate from it. And if you can afford it, get more contracts. That way you can start taking profits as they come. If you don't want to, if you want it to keep going, want to let something keep running, and you got multiple contracts, you can go ahead and shave some for profit. That way, if the last one that's running ends up going against you, you still basically could potentially break even.
Yeah, you're right. All right. Appreciate it, man. Thank you.
You're welcome. Okay. Who's next?
Hi, I have a question.
Okay.
So I just joined this group, and this is not related to this. Though I was wondering, where can I find a video that will tell me, how to get started?
I don't think there's really a video for that.
Because I am really confused right now, so I just don't really know how it's gonna work. You know what I mean? Like,
Under education, if you go to educational videos, the first playlist they have is really helpful. It puts it in
Got
plain
it.
English. I just listened to it and it was really helpful.
Got it. And do we have a specific option where you get message saying that okay, hop in here and then hop out and things like that?
Yeah, the alert section has all of that information. All of our analysts alert entries and exits Attilio does it, but he actually goes on live like we are right now, and he'll share his screen and talk through while he's trading usually. So that'd be a good thing to join during the day if you're interested in doing scalps with him. Most
Got it.
people
Thanks.
swing shares, or I'm sorry, swing options. Myself and another person named FaZe, we do option selling. Tilio also does shares sometimes. I do shares. So I mean, there's a lot. I'll be honest with you. There's a lot of stuff here. There's a lot of things, and I don't know your experience level or anything really at all. So it's hard for me to tell you specifically where to start or what to look at. But like somebody just recently said, the education section is probably a good place to start. Also, there's a new traders start here section that could also probably prove beneficial to you.
Got it. Thanks.
You're welcome.
Hello. I have one question.
Okay.
So, can you give me a technical analysis on PLTR? PLTR.
Echo Lima Tango Roger.
P for Parrot.
Peloton.
Sorry. Yeah, Peloton.
Palantir, whatever. I think this is a this is one of those tricky ones.
It's one of the tricky one, yeah.
Because look, this is what I mean.
Yeah. Okay. I think it's trying to come up.
It's
but
squeezing.
not. Yeah, squeezing.
But it's not squeezing in the sense that it depicts a direction, right? So hit a high, hit a low, set a lower high, set a higher low. So I mean, you see what I mean? Like it's squeezing in
Yeah.
this way. I mean, I think it could be bullish because the highs are lower. I'm sorry. It could be bullish because the lows are getting higher.
Yeah.
But again, the contradiction here is the highs are getting lower. Right? So it's they're both sides are contradicting itself, and that's what makes it squeeze. So at this point, it's like we don't know.
Okay.
It's hard to say which direction that's going to go.
Okay. How about space? SPCE.
I expect that to be bearish moving forward. It's going to come
Okay.
down from that
Yeah.
high. There's no way it's going to keep staying up there.
Yeah,
It
okay,
always
so
does this.
basically I bought PCE and TLTR. I'm gonna sell it like very early morning. Yeah. Okay. Thank you. Thank you very much.
You're welcome. Okay. Who's next?
What's your thoughts on Amazon? I think it should go up, but I don't even know what's going on. So if you can share, that'd be great.
So this is another one of those that was squeezing. Let me just draw it out here. So this one's doing the same thing relatively that FieldTR is. Setting lower highs and higher lows. As of recently, it's broken through the lows, so it's creating lower lows, and that's not a good sign for bullishness, right? I mean, we've got lower lows here. So you see the trend was this line, and you had your higher highs here, right? So if I draw another line that depicts these higher highs, I mean, see, it even doesn't even really, it's hard to get it through. So, I mean, something like that. So it's broken through these lower highs, right? The circles. Circles are the lower highs, and then it created a lower low. That's a bearish indicator in my opinion. So
So
I
do
would,
you think I should hold on to it or I should sell it?
is it an option?
No, it's long term.
Well, I mean, if you're in profit, sell it for profit. But if you're not in profit, I would hold it. It's never an issue to hold shares. You know, you can hold shares for a while. It's totally fine.
Got it. Thank you.
You're welcome. Okay. Who else?
Quick question. I think you might already go over it. I was a little late. What is your thought on Tesla?
I think Tesla. So I mean, it's definitely it's doing some weird stuff right now. So it set a lower low and a lower high, but then Friday it set a higher low. So it's acting a little weird, right? I mean, you got this lower low, and then this lower low, and then this one is higher. Then the highs hit a high, then hit another lower high, and then hit a lower high, right? But I think that Tesla is still bullish until the end of this week, 18th. I think Tesla's bullish. I think Tesla's going to retest 669. But who knows? I mean, this new data here makes me a little more bearish, if that makes sense, because it's starting to test the lower side versus the higher side. So when it announced its SPY edition, it just was up and up and up and up basically, and then now we're getting some resistance, some pretty heavy resistance. I mean, if I draw a trend line downward from this top, I mean, it's kind of following that, right? So the Tesla is a very unpredictable stock. It could open up tomorrow and skyrocket. I have no reason to have done that. So Tesla's a hard one to say. What I can say about Tesla is when it hits a 30 to 60 day low, that's probably a good time to get in and be bullish.
All right, thank you.
You're welcome. Okay. Who else?
Anybody wants to ask?
Go for it.
Why do you need a margin account to sell to open?
Because you're shorting. Anytime you enter a shorting position, margin is required.
All right. And technically, when you're going long on a put, right, you're shorting the position as well.
No.
No, it's not the same.
No. So anytime you buy to open a position, you're long, regardless of the direction.
Which means you're putting it down a debit, right?
Yes.
So if I was shorting it, I would receive a credit.
Correct.
Got you. So being bearish and buying a put isn't shorting a position, because right? Because like
Nope.
I read someone saying that once, and it kind of like fucked with my head a little bit, or messed with my head. Sorry for my language.
That's fine. No, that's not shorting. That's just betting on a downward direction, but you're not actually shorting it. So shorting is, like I said, you buy to open, you're going long. Sell to open, you're going short. Right? You're borrowing shares when you sell to open. You're buying shares when you buy to open. Right?
Yeah. All right. Thanks for clearing that up.
You're welcome.
There's a question. I have one.
Go for it.
I was just wondering if you could do an analysis on Pfitzer, PFE.
I mean, they had their FDA approval. I mean, I'm seeing lower highs and lower lows though from its high, so that's kind of a bearish indicator. But they had the FDA approval, so they could rocket again, or they could start rocketing. That's another wild card, in my opinion. There's no telling what it's going to do based off of that FDA approval as far as letting them release their COVID vaccine to the market. I mean, I would assume that it goes up.
Would you recommend for or against maybe going long term in them?
I would go again. I would not go long term. I would wait for it to establish a low or a support level before you start going long on it. You mean long as in
Okay.
shares?
Just more of a like maybe a call with a longer out expiration date rather than
Oh,
short term.
Well, as I said before, I don't like going long or bullish on anything at a high. Even if
Right.
I think it's going to keep pumping, it's just decreasing the probabilities of it going in your favor because it's already at a high.
Okay. Thank you.
You're welcome. I like to be more conservative than most, I'll be honest, with my money.
It's all good. I appreciate the opinion.
You're welcome. Okay.
So I'm planning to have like 2% return on my investment that I have purchased my shares. So like, would you like to go for it? So what I'm planning is like, strike price is a bit higher from where it is currently trading. So like $10 to $15 up. And I mean, wherever I get 2% of my investment. So a month, let's say every week I would go for 0.50%. So 4 weeks would meet my 2%. Is that a good strategy?
Oh, it's not a bad idea. The only thing I don't like about covered calls is you're already deep in that position with the shares. So if it goes against you, yeah, your short-term sold call is going to benefit, but your long-term shares are going to not benefit. So that's why I prefer calendars with leaps.
I have requested you for making video for that. So I'm taking a look in that, but I'm not able to find the video specific about the strategy you are doing. So like whenever you make, I would try to learn, and once I get, then I will apply that.
Okay. Well, maybe I'll make that my next video since I went through quite a few other videos recently. Maybe I'll do that one next since it seems like I get equal amount of requests for credit spread videos and calendar videos. So I'll look into maybe doing the calendar first since I think it's a safer bet than spreads. It's basically a spread. It's just more expensive.
So like, can we do calendar by having the shares, or it's like completely that we are doing buying option or selling option, something like that?
Well, owning the shares, it's not going to be a calendar at that point.
Okay.
I mean, it's a covered call. There's no other way to put it. And
yeah,
you're going to lose. You cap yourself with the shares, whereas the leap, you make money on the calendar.
Yeah, I would like to cover call because I'm already have bought the shares. So at this point, for me, I would not sell those shares in loss. So instead of just keeping my shares in my account, I decided let's say I have given my money to someone on the 1% interest or 2% interest a month. Make some kind of money whatever I have invested. Strike
Right.
price I would choose is like break even. So even if it goes and hit the break even price, I would not lose any money. Instead, not making money on my shares.
What's the ticker?
Make probably it's a Neo. I'm not feeling well with the Neo now at this point.
Do you? What's your break even?
It's 45.60.
Sell the. You could sell the 50 for January 15th. Well, first question: do you want to continue to own these shares, or you would be okay with it going away?
I would be okay. I'm not a fan to keep it in my account for long term. As soon as I make a couple dollars, I would sell it.
I see. Okay, then sell it right at the 45 strike. Sell this strike. 45 January 15th. You get $485 for it.
That's for per contract, right? Per one contract for 85.
Correct.
Okay.
$485.
So
See?
So you would like monthly, not weekly.
Only time I do weekly is if it's worth it. Oh yeah, that's not bad. 218 or 215. That's not bad at all, actually. What's the IV?
Your pay is like good weekly.
I mean, $200 for the weekly. That's not bad at all. And if it takes it from you, I mean, so what? You make $215. This week, 45 would be 100 and some $116. So, but I mean, 2 weeks from now is a little more than double this front contract here. So 116. So double that would be 226, 232. Whereas this one is Maybe that is better. 45 for this week.
What's
Sell
the
it.
strike price?
45.
45. Okay.
So, well, you said 45.60 was your number though, huh?
Yeah, so yeah, I would go for 46.
That's $90. I mean, personally, at the direction of this thing, I mean, it's downward.
Yeah,
So,
it's a berries.
but I mean, it might be at support here. Let's see. And that is a support level. It might pop. It might bounce. It's all going to depend on Tesla, in my opinion. What does Tesla do this week? NIO will follow. And personally, I would like to see Tesla pump. I'm kind of mixed emotions on whether it will or not. They did their share dilution thing, whatever that was, Friday, ended Friday. It's like it was $1 billion in shares, maybe, or something. And it's over. So we might see Tesla pump now that that's out of the way and you got 1 week left until it hits the SPY. I personally think Tesla's going to pump, but we'll see. I'm not always right. I would probably wait on this. I mean, again, worst case scenario, if you don't care at all, go for the January 15th. You're going to see $450 at the $46 strike. But I will tell you this, if it starts pumping back up to $50 range, I mean, you got 100 shares there.
So I think 50 would be better, right? So I can make a little bit on shares and a little bit on the premium.
Well, let me calculate how much you're going to actually make on shares. $4,660 is how much that is, right? It's 46.60. You said 45.60. I'm sorry. Yeah, so that's $4,500 roughly. You'd make $500 if it hits 50, or 440 plus 345 if it actually hits 50. So I mean, you'd be 700 plus on that one if you sold the 50 strike for January 15th. But I mean, again, the question is, do you want to own these shares or do you really want them gone? Because if you want them gone, you kind of want to sell. I would go for the 45 strike. You'll lose $60, but you'll gain 425 if you want them gone. If you don't mind holding them for long term and sell calls against them every time contract expires, I mean, that's fine too, because that's going to lower your break even, right? I mean, your break even is 45.60. If you sell this 50 strike, 45.60 minus 345 It's going to lower your if it does not take your shares and stays under a $50 strike, it's going to lower your break even to 42.15. You know, it's not going to
Yeah,
actually show that,
that's
but you're just going to keep the profit, and then in your head, that's your break even on that because you've made the few $100s off of it already. So then you sell another 50 strike. Let's say it's at $49 now. You could sell another 50 strike, and it would be worth $600 this time, or you can just sell the shares at 49 and take in an extra 300 some dollars for the difference in the price of your break even. You know what I mean? So I would personally do the January 15th. There's enough premium there for me to say, yeah, that's worth it. And I think NEO in the long term is going to keep going up. So I would try to honestly finagle this to where you can keep selling premium against it for the next 2 or 3 months, maybe. You know, so just keep taking premium in until the value of your shares is worth $20 or $15. You know, get the value down here to I mean support really. Say $39. If you get the value to $39 for your break even on the shares, I mean I think that's a really good position to be in because I don't think NEO's gonna be I think it's gonna keep going up in my opinion. I think it's going to continue going up in the future. It's not going to go down. To be honest, I mean, I might even look to sell cash puts on this. Shit. $530? Not bad. $40 strikes is 470. I mean, the percent return on that for me for a cash put is oops. 530. That's 13% in a month. That exceeds my my 2.5% goal, I guess. I mean, so here's the other thing. When you trade stuff, like for the Roth, for example, and I can do cash puts in my Roth. When I trade stuff, every trade that I do, even if it's not the total amount of my account, everything that I do, if I just make 2.5% off of every trade, regardless of the size of it, I'm still going to get that same 2.5% return of the total account value if at the end of the month I've traded the total of my account, if that makes sense. So if I do 10 trades and I get in and out of all of them, not in all of them at the same time, but in and out 2 or 3 here and there, and then at the end of the month I've traded the total value of my account and I've made 2.5% off of each position, that still equals out to be 2.5% of my total account value. So that's another way to do it, right? I mean, like you don't have to be like, oh, I'm gonna put 10 grand in and then I'm trying to get 2.5% out of my account right now with that. You know, I could easily invest $41, or I'm sorry, 4,100, get this 530. My total account value for both Roth accounts is 650 for 2.5%. So this 530 is almost there. I've got 2 or 3 other positions that guaranteed I'm going to make $100 a piece on. So boom, there's my money. There's my return that I'm looking for. So I actually might get into NEO because it's at support. I really believe that it's at support. I mean, look at it. It could fall, but again, I think long term, NEO is in a good position. Right? I mean, look at it. That's the support level. 1 day, 2 day, 3 day, 4 day, 5, 6, 7, 8, 9, roughly 9 days, it touched that level and bounced. That's strong support to me. So, you know, you do what you feel best. But here's the reason I like cash puts, right? Just take a quick look at this. $530 I get paid at the $41 strike. Minus 530 from 41. 4,100 minus 530. That makes my break even at 35.70, which is going to be basically between these two strikes. All right. That's my break even. If I get assigned shares, that's my break even. So instead of you doing covered calls, for now on, you should do cash puts. It sounds like you've got the capital for it. I recommend you do cash puts. You're going to see a lot more benefit in that because then you don't have to worry about like, well, I'm going to buy shares and then sell calls against it. I don't really want to own the shares now that it's going against me. I don't really like that. I'm down. I got to sell calls against it now to, you know what I mean? Like, whereas a cash put, it's like, well, I'm going to sell puts and I got the cash to cover the position. And if it goes against me, that's okay. You know, I have my premium amount and I'm still, you know, you're basically buying the shares for a discount if you get assigned. You know what I mean?
Cash put, you mean to say sell put, right?
Yeah, sell puts and you have cash to cover it. So like this 41 strike, I have $4,100 in my account to cover that if it goes in the money. It goes in the money day or two before expiration. If it's down here at $37, I can still sell it for a profit. If it's at 38, I still sell for a profit. It has to be under 36 for me not to see profit on that by day or two before expiration.
That's how I started options, from the sell put.
Yeah, I like that a lot better because here, if you get assigned shares, like let's say I sell the 41 strike, it goes to $34, right? Let's say it hits $34 and I'm like, I'm totally in the money. I'm actually down a little bit when I do own the shares. Then I'll sell 41 strikes 2 months out. Right? So look how much it costs 2 months out in February. So let's say right now, I mean, it's $735, or I'm sorry, $830. I'd get paid $830 for that same strike that I got assigned. So that's how I do covered calls. I get assigned on the cash put side. I sell the same strike a month or two out. Right? Because if it's good enough premium, it's going to lower your average cost to the point where if you do get assigned, you've got a great deal. And then you can turn around and sell cash puts to that same strike and get almost double what you got paid cash puts for. But you got to do it a month or two out. At least, I'd say 45 days is really the number I'd be looking for. I mean, 68's a little far. 30 to 60 for covered calls when you get assigned shares from a cash put. So, and again, like, look, $630 for this one. Right? So you still get more money for it. If I was assigned right now and my break even was 35 and change and the stock price was at 34, well, obviously this number is going to be different. It's going to be a lot cheaper. You're not going to be able to get it for that much. It'd probably be half that. It'd probably be $200 or $300 at that point. But the beauty is your break even is down here at 35. So it still equals, you know, it's basically the premium that you were paid plus the new premium. That's the total amount you get when your shares get called away finally. You know, and let's say they don't get called away. Let's say you sell covered calls after being assigned that cash put, they expire worthless. You retain those shares, and then 2 or 3 days later, the share price rockets up $5. That's the best of both worlds. Because you get it, you get a great price for it.
Man, that's what I have done with Bank of America, but no, I little bit get greedy with the Neo and just bought it right away instead of putting sell put. I would have even get the little bit lower price because premium would cover that, and then after if I purchase, because anyways I wanted to purchase, I still do covered calls. It will even lower down my break even. Money is like up and down. Money is there. So what I will do is now I will do the covered calls whatever I have, and also I will do the sell put because I want to average down whatever I have. Average down my break even. So like go with the sell put as well.
Yeah, do both. Yeah, absolutely.
Yep.
I mean, especially if you've got the capital for it, why not? Why not do both? Because I mean, again,
Yeah, man.
this situation is you just own shares basically. In the end, if everything goes against you, you're owning shares. That's the beauty of it, is you're not losing. You just end up owning the shares.
Right.
Much better strategy, in my opinion. That's I think me and FaZe Moton both do that same strategy, right? He does it a little bit differently than me. I think he's a little bit more aggressive than I am, but he's got more capital in his account. I have less money, and he's doing it on a margin, I believe, and I'm doing it in retirement accounts. So I'm safer with my money, right? He'll be a little bit more aggressive. He'll go after things that are. He goes for high IV stuff, not necessarily support levels or anything like that. Whereas I go for strictly support levels with cash puts. I don't go for high IV. Like, it has to be support, and the IV has to be good for me. For him, he just likes high IV. Then he'll sell against it because his thought process is, I like the high implied volatility. I'm going to take advantage of the premium, and he's okay with selling calls against it in the future. Me, I don't necessarily like to do that, but that's a way of managing your risk, so that if you do get assigned, now you can manage your portfolio in the sense that I'm going to lower that cost now that I own the shares at a discount. So I own it at a discount, and I'm going to lower the cost. And if it takes them away from me, well, I'm gonna end up taking in the total profit that I initially got anyways. So the premium paid plus the premium, I'm sorry, the cash put side that they paid you premium plus the covered call side that you got paid premium, those two combined, right? You get to keep both, because you get assigned the shares, you keep the premium basically, which that's how it calculates the price of your shares. And then whenever you sell calls against it at the same strike and you get paid a premium, now you're realizing the gain on both ends, basically, if it calls your shares away.
That's the whole point that I get in the options. He watched a video on the YouTube. One guy with probably around $300,000 capital. He's just doing this. He's just doing a cash put. That's all he does.
Oh man, when you've got that kind of cash, this is the best way to go. And calendars and
Yeah,
cash
man.
puts.
That's what made me interested to jump in the options, because I thought like, okay, I want to purchase the shares, right? But this is something that what the price I would like to purchase, I just decide the strike price and do the cash put. If it even goes and hit that price, I would own shares what the strike price I like plus the premium. So that is even lower down my break even price, and I have shares. So like nothing wrong with that.
Yeah. Oh yeah. It's solid strategy. Safe and solid.
And I did.
That's why I do it in my Roth account.
Did stupid thing, man. I did stupid, man. Fuck.
That's
How
fine.
much
Look,
I have? Like I have almost 300 shares right now, man. You.
I mean, it's fine. It's not a big deal. I promise you, it's not a big deal. I don't see Neo falling too hard. I mean,
I get that hostile, but like this thing, like I knew that I would have made money on the cash put. Plus, my break even was even lower. So even if the Neo goes to 45, I would have made probably around $5 to $7 on that because that premium lower down my break even. And instead of break even 45, 60 right now, I would have made the money
Right.
and plus covered call.
Yeah, I hear you. I hear you. But learn from your mistakes and
Okay,
don't
good.
repeat them. That's the beauty here is learn
Yep.
from your mistakes, don't repeat them, and you'll be in a better position next time to make a better decision.
That's why I'm here to listen to you, man. I'm learning a lot from you.
Great. I'm
This is
glad
just
to
the
hear it.
beginning.
I
Thank you.
love it when people learn. Cuz that's my benefit here. That's what makes me feel good to know that people are learning. Like
I'm
I
not
could
learning.
I could care less if you're making money. I could care less if I'm making money off of you. I'm happy that you're learning. That's the reward for me. So that makes me happy to hear that you're learning.
Yo, can I ask a question after the line? Like, just
Sure, I think he's done. Are you done, um, Johan?
Yeah. So I'm done.
Okay.
Yes, I'm done. Appreciate that.
All right. Go ahead, Treat.
basically, yeah, I went through your lecture yesterday on the Roth, and I see the potential, and it's like huge, but I'm not sure what to focus down on anymore. I found that I like scalping support and resistance levels intraday. Like I just have some interest in doing that, but really my big interest is really just in a long term goal. Like what can make me money in the long term. It's not really like like playing around with. I mean, I don't really know what to do in that sense. Like, how do I say it? One second, one second. Sorry. Okay. So basically, I remember you were talking about options being really riskier than shares, right?
Yep.
So what do you think about it? Is it just inherently like way more risky?
It's just because you have time, or you don't have time, rather. It's against you. Unless you're doing what I was just talking about with Johan, cash puts, because you essentially own shares at that point if it goes against you.
Yeah. Well, I don't know. I'm trying to think of what to go about now doing this, because I want to focus on what can help make me make money in the long term. Do I need to figure it out myself, whether it's like day trading, swing trading, investing, whatever it is?
Well, I can tell you right now that day trading and scalping with options is not going to be it.
Okay.
How much capital do you have?
Basically none, like a couple thousand.
So I would probably start with shares. Build your account up to $10, $15, $20,000, and then you can start doing cash puts.
Cash puts.
Yeah. But cash puts are expensive, right? I mean, you've got to have a significant capital to be able to do cash puts. Now, that's the safest strategy out there, other than calendars. But calendars, I think it's a little bit more risky than cash puts because you still have that theta decaying the leap. But cash puts, it's either you win, keep full premium, or it assigns you shares, and then you sell covered calls against it at the same strike and continue taking in premiums until it takes your shares.
I mean, Hostile, what do? You trade support and resistance with shares, right? You don't do cash calls or puts or whatever they're called, right?
I do those too. I do credit spreads, cash puts, covered calls, calendars, and shares. So I don't put all of my money in one type of strategy. I split it up. Because there's things out there that are worth doing cash puts on. There's things out there that are worth doing calendars on. There's things out there where I don't have the money to do cash puts or calendars, but I can do spreads with credit spreads, right? So it just depends what you're looking at. Like Tesla, credit spreads. Amazon, well, I don't even want to talk about Amazon. Lockheed Martin, I can't do cash puts on that. That's $36,000. I don't have the cash for that, but I can do credit spreads on it, and I can make $100. You know,
Yeah.
I could do shares on it. You know, that's another option. If the IV's not there for me to do the spread, I'll do shares. You know, so it really depends on what the ticker is, what the implied volatility is, how much money it costs. There's just quite a few things that matter. Right? Those are all those strategies are the ones that I've found that work for me, but they work in specific situations. You can't just go across the board and say, I want to do all credit spreads, or I want to do all cash puts, or I want to do all calendars. It just doesn't work that way. Like a calendar, I need low IV to get a leap, and then I got to wait until IV builds, and then I can sell calls against it. Then I take in that big premium, right? So, you know, it's there's just a lot out there, and your capital, that's going to prevent you from doing most of these trades. You know, $2,000 or $3,000, you're not going to be able to do calendars very much. You're going to be able to do any cash puts hardly. I mean, you can do stuff under. You can do one cash put for $30 strikes. You can do two cash puts for $15 strikes, but you know that's really limited. Whereas shares, you know, you can do $1,000 per position, and you've got time on your side. And when you get 10% return, you exit out and go do it again, and just keep recycling that. That's the safest way to build your account. And then when you've got large amounts of money, 10, 15, 20, $30,000 in your account, now you can start looking at doing a calendar, one calendar, leap, and like one or two cash puts, 3 to 5 credit spreads, if the IV's there, and then shares for everything else where there's no IV, but it's at solid support levels.
Okay, yeah, I heard that. But Hostile, why do you think that options scalping is too risky? It's just because time, right? Do you think share scalping would be less risky? Because I could just turn it into a position, right? And you just hold it longer.
Well, let me make sure I understand. You're not trying to short shares. You're only
Only trying to buy. Yeah,
Okay,
I don't like that borrowing.
Okay, so yeah, I mean, you could scalp shares too. Absolutely. I mean, I'll be honest with you. There's been a handful of times where I probably said this before. I'm pretty sure I have, where I get into a position, it moves 2%, and I'm seeing $60 to $100 in return. You know, I'd be foolish not to take that, because it's not going to stay up there. It's gonna come back down. I've seen it happen so many times. And you know, if it does skyrocket without me getting back in again, oh well. Next, go to something else. There's opportunity everywhere.
But why would you say that? Why were you like sounding like? Oh, I mean, why did you say that? What is it called? Options scalping would not be the way to make consistent money throughout the long term.
It would be if you have a huge account and you can afford to take losses.
It's because you're constantly risking money, right? And you just lose.
Yeah, option buying is pure risk. I think option buying is the most risk you can do in options.
So you're saying I should try and learn other strategies like investing and stuff? Or like just swing trading using standard deviation, or trying those things out right now?
I mean, those are some of the tools that you can try. Absolutely. I mean, it may or may not work for you. It may or may not interest you. You know, that's the other thing. What interests you? Right? I mean, if only scalping, buying options interests you, then that's all you got. Because I will tell you that if you put time into something you're not interested in, you're not going to be amazing at it. You might be good, but you're not going to be amazing. Do the things that interest you, because if you're interested in something, you will excel at it.
Is so options scalp trading is too risky, is what you're saying, right? I honestly, this is the one thing that I have some interest in. Honestly, I only trade options like from 11 to like 1 o'clock. Or I actually only day trade scalps like from like the last 2 hours of the market because that's when I see the setups at least.
I
But
mean, again,
if there's potential, if there's no potential because I don't have enough capital, then I don't think I would want to focus on this, even if I do have interest in it. Is what I'm saying.
regardless of how risky something is, if you're not interested in it, or if that is where your interest lies, that's what you should concentrate on. It's that simple. It's like if you go to college and you look for a specific degree that you're interested in and that you want to learn, you're going to get A's. But if your parents tell you, I want you to go do this, and then you get in there and you're not really interested, you don't put in the effort, then you're not going to be good at it. You're not going to have you're going to have C's and D's or F's, right?
True.
It's all about what you're interested in. And regardless of how risky something is, if that's where your interest lies, that's what you need to concentrate on.
I think I'm interested in this, but I also like I don't know. I mean, I'm at the point where I think I understand enough trading where I want to just be actually like executing like or trying things out rather than watching videos. But I also think that I lack some knowledge in like other strategies and stuff because like the stuff that you're talking about, I've never actually tried it. I've heard of it before, obviously. And I've like seen people do it, but like never actually like tried trying to do it, you know?
Well, again, you can virtual trade on Thinkorswim and try it.
All right. Yeah, I'll go try it then. Thanks, Hostile.
You're welcome. Who's next?
I have a question.
Okay.
What do you tell from FedEx and UPS?
What do I think of what in UPS?
Yeah, FedEx and UPS.
Oh, what I think about those two tickers? Well, someone made up or brought up a point about UPS being one of the major distributors of the COVID stuff and having storage centers. So, ooh, is that a cup and handle right there? I think it is. It's a pretty deep cup, but who was it that was asking about cup and handles before? This is another example, I think, of a cup and handle. I'm thinking bullish on UPS. I mean, I'll be honest, it's been pumping since COVID, anyways. And if that is a cup and handle, I would expect to be retesting 178, if not going past it. What's the FedEx ticker? Is it FedEx?
FDX.
FDX? Yeah, FDX. I'll be looking for FedEx to hit a support level here soon. Or not soon, but Be right here. Yeah. Right here at 257 might be a good support level for FedEx if it falls that far. It may not. That one's been pretty bullish too. You got to remember that people are ordering more things due to COVID. So UPS and FedEx running full time. I think those are really good to get into leaps with and calendars or calendar leaps. Oh, that's a huge cup and handle, VCAV. Holy crap, look at that. That's over a 90-day period. Wow, that's huge. Not seeing it on this one, VCAV. WMB? Or did you mean Walgreens? Walgreens. WBA. Yeah, I'd say that's a pretty decent cup and handle too. One's pretty large. Well, I don't normally see them that big. Yeah, that's a big one. Wow. Man, hmm. So it's UPS that had it. The really small one. And then CVS and Walgreens both have it. Interesting. Okay.
What do you think to go on inning options contracts?
I'm having a hard time understanding you. It sounds like your mic's kind of going in and out when you're talking. You still there?
Yes.
Ask your question again.
What do you think about getting options contracts on UPS and FedEx?
Well, I wouldn't do both. I'd do one or the other.
For calls?
Well, I wouldn't trade the same industry twice at the same time. I think UPS is a better one.
What is a good strike for?
I mean, can you afford $565? I'd get at the money if you can. Open interest is there. Bid ask spread's not too wide. Although the bid ask on the 180 is better. And even 185 is even better as far as the spread goes. Does that answer your question?
Yes. Thank you very much.
Okay, you're welcome. All right, anybody else got any questions?
I just want to say that the Excel sheet really helped me put in perspective like my investing goals, and like the guy before, I'm young like him, and like I just want to find like the best investment strategy that will get me the most money consistently in the long run. So I decided that like options and day trading is like too risky, and like it's gonna distract me. Like sure I can make a lot of money quickly, but it's also like causing me to lose like quite a bit. So I was wondering if you could just show us more about like how to execute and like plan a swing trade, or even like you said, selling covered cash puts. If you could like guide me through like how you plan and what you're looking for.
So I always go to the 180 chart.
The half year chart.
It's yes.
Or yeah.
Or yeah, 6 months. Yeah. First thing I do is draw out support resistance levels. All right, so I look for the closest one to where the current price is, which is going to be this right here.
All right. So you draw the support at the where it gets hit the most, or
A consistent area where it bounces. And then I draw one at the low, closest low.
Mm-hmm.
All right, and then I look for resistance levels. This. And that. All right. And I want to get the price on one of these support lines, preferably the bottom one, but I'm happy to get it right here at $19, $20.
Okay, and you would set an alert, right?
I'd set a limit order to enter, so it
Oh.
initiate as soon as I got to it. So
And
once I'm in it, then I set a limit
Okay.
exit order for the price that I'm looking for, which would be probably this 22.75 level.
Mm-hmm. Like immediately you would set the
As soon as I get into the trade, as soon as I have the shares, then I set my limit exit order.
and you set one that's good till canceled, right?
Yes.
And do you set a stop loss or
No. Never do stop losses with shares. But with that being said, never get into a stock that's terrible.
so you're saying that if I was ever considering a stop, it means that I just entered a trade in a bad point in the first place.
Well, no. You never consider a stop because you never want to lose. And a stop basically says that here's a chance for you to lose. If you're doing shares, you have all the time in the world. If you have to bag hold something, bag hold it. Don't take a
Well, that
loss.
isn't that assuming the share will go up eventually?
Well, yeah, that's why I said you don't get crappy stocks.
Okay, so this is what
Yeah,
this is a higher quality stock, right?
well, invest in something that's solvent, something that's been around for decades. You know, I mean, Rocket's not been around but just this year, but I like it.
Mm-hmm.
So
I'm
willing to invest in that. But
Well, I think there's a caveat to that too, Hostel. Like you have to have the capital to be able to average down and not be all in. If you're going like with no stops and anything, like that's the theory behind it. If it dumps, you pick up shares at those support levels on the way down.
That's right. So
Okay, this is
you don't
more.
you don't
Sorry.
necessarily have to have tons of money, but you need to split your money up. So if you've only got $1,000, number one, you're gonna have to invest all of that. You're not gonna get any kinds of returns, with $100. You're just not gonna see. You're gonna see a couple dollars. But if you've only got $1,000, you want to invest $200 or 250 or 300 maybe. At least that way, you're gonna see $25, $30 with. Well, let's see. Let me just do some math. So you'd be looking for a little bit of higher percent return with $300 in. So $300, or I'd say 10% is going to be the number you're looking for. But if it falls and you have to add to it, I'd say, let's say you get in. Now this one's not a good one because there's not too many support levels except for two. Well, let's say this. Let's say you get in where it's at. Right? You get in at 2062. Let's say you put $300 in, and then the stock drops to 1950. Right? I'd throw another 300 at it, and then if it falls down to this support level down here, I'd throw the rest of that $1,000 into it. So you got another 400 to put in. So you did 300, 300, 400. Right? That's how I would do that. Let me see if I can find. I think silver was actually a good one. So right here, I get in silver right here. 2288. Yeah. It dropped after. So I actually honestly should have sold when it went up here. I thought it was going to go further, but it didn't. I got greedy. Anyways, it happens to everybody, even me. It fell down here to 2045. I bought more. And then I had these couple of bump ups, and I didn't really like the profit I was looking at. I mean, there was some profit. Don't get me wrong, but
What percent of the investment was it?
So I paid 500 right here. Another 500 here. All right, did all these pumps. It went down again right here at 21. I think I added like a couple hundred. Pumped again, didn't let it go, and then it went back down to 20, down here, 2039, something like that. And I bought another 600 or 700. So I've got around 2,000 in it.
And what's the break-even price? It would be the first.
No, break even's going to be the average between all 4 points that I entered.
Okay. And where would that be in this scenario?
Without looking at my account, I think it's like 2075 maybe, 2080, something like that.
So you're already in profits, right? And you're just waiting for more?
Yeah.
Okay.
I'm waiting for it to break above these two resistance levels, right? Because then when it does that, then I'm looking at $25, $26. And I'm willing to take profits there because now versus before, when it did this pump, I didn't see but maybe $100, right? And I should have got out because then I could have got back in at a lower price for more money, but I didn't. But now, if it breaks above these and comes up here, I'm probably going to be looking at $300 or $400 because I got more money in it. Right? So if my break even is, under 21 and it goes to $25, I think I got. I don't know. I want to pull up my account. It's going to take too damn long.
So are you looking for at least a 10% return on investment?
It's not necessarily. I'm not looking for a percentage now. I'm looking for resistance levels on this one.
Okay.
Right. So before, um, I was looking at percent, but now I've got a decent amount in it, and I know what resistance level I want to get out. Right. So that to me is more important because I'm able to, like, I know the stock's gonna, once it breaches resistance, the front resistance, the back resistance is the next stop. And so once it breaches the front one, now I'm in the position to take profits before it hits that next resistance point. And that's going to be more percent return than what I initially had in mind.
Okay. Okay, so you're not worried about like specific percentages, but more so like the support and resistance you get from looking at the chart.
So it
Then
depends. It depends.
okay, it depends.
Right? It depends how much money I've got into the position. It depends where the stock is, the price levels, and the resistance levels. All of that makes a difference. So I don't stick to one specific rule. I generalize my rule. That way I can allow myself to make more profit if it presents itself. Right? So again, if I'm my first entry, like let's say I got in here at this point, this bottom point,
Yeah.
I probably should have, or at least this one, I should have taken profit when I hit here because I had my percent, my targeted percent, but I got greedy. You know, I'm bullish precious metals, right? And I should have taken my profit, but I didn't because look, I mean, it right here it breached previous highs. It was making higher highs, so I'm like, all right, sweet. I want to see this thing retest 27.88. You know, I mean, this price was 26.86, so another $1. I'm like, all right, we're gonna see this retest it, and it just fell. So, you know, it is what it is. But the thing that I have to do to improve myself is when I have a small amount in and I see a 10% return or 15% return, I need to take it. Right? It's just that simple. I need to take it. And
Okay.
if I have to average down, now I'm looking at resistance levels. So if I've had to add 3 or 4 positions or 3 or 4 entry points to that position, now I'm looking more at resistance because it's lower than it was before. I had a percent target in mind at my first entry. So now I'm looking at, all right, if it breaches this resistance, it's going to be higher than my percent return. Now I want to look for the best place to exit, which is going to be before the next resistance point. I don't want to wait till it hits resistance. I want to get out before it hits resistance.
Okay.
Or I can set a trailing stop loss. So when it does hit resistance, if it falls below my trailing stop, I take profits. But if it doesn't fall and keeps going and goes through that next resistance level, well, now I just keep making money until it falls.
Do you always use a trailing stop loss then? Because that makes sense, right? Because you never know, like, if a stock is gonna keep going up.
Most of the time, yes.
Okay.
If I have a significant amount of money in it, I will. Unfortunately for me, sometimes it's hard to determine where to set the trailing stop, right? So for me, I ended up I ended up selling mRNA at 87, just over $87 right here, right? I think it was actually, yeah, it was like, it was somewhere, it was this bottom right here. So I had a trailing stop. It went all the way up, then my trailing stop followed it. to this bottom area. 87.44, I think, is where it was. Somewhere right. Let me see if I can get closer in. I don't remember. No, that's not it. It's this one. Okay, it might have been higher, 87.80. But either way, it pumped up. My trailing stop followed it behind, and then it fell down and initiated my trailing stop, and then went up and went to freaking $178. You know, so I just made the trailing stop just a little bit too close. So initiated my trailing stop here. I got out with $400 in profit, and then it ripped and went over. Let's see, over double. So I could have probably made about 1,500 in profit off of this had my trailing stop not initiated. So that's the tricky part, is trying to determine where's the best level of your trailing stop.
Mm-hmm.
So while you can make money, additional money off of it, it's there to protect you in case the stock starts falling. And it's hard to determine where's the best place to set it at, because you don't want to stop yourself out too soon, which is what happened here for mRNA for me. It was like within 5 cents it stopped me out, and then boom, it ripped after that. You know, a week later it ripped. So I was sick to my stomach when I saw that, but it's okay. I still made $400.
Yeah. Okay, that makes sense. Again, in terms of capital, how much do I really need to be consistently like profiting from swing trades? Because
Well,
you
consistent
said that.
profits has nothing to do with how much money you have. Consistent profits has everything to do with your strategy. You can make consistent profits with $500.
All right, sorry. My question is, would it be worthwhile then if I trade with like a lower amount of capital? Because I have like several long-term shares in ETFs I'm holding in my portfolio that accounts for over like 70%, and I only have around 20 to 30% of cash that I'll use to like enter into short-term swings or like options. And I was wondering, like, if I want to make the most money long term, should I just liquidate
Yes.
all my stocks?
Never go
I
long
should,
term on stuff. You make more money swinging shares.
because I've been holding this SPY for over 2 years now, and it's giving me like decent returns. I think since I first bought it, like 20 some percent.
Again,
But you said I'll be making more money if I just have like $12,000 of cash available to swing.
you make a lot more money swinging shares. Here's an example. 2009, I put $10,000 in. By 2014, 2015, I sold those positions and I had $30,000. Okay, so that's 200% return. This year, starting in April, I had $36,000. By the end of the year, I'm at $65,000.
Okay. And the only difference is that you're just actively managing your trades and stuff, and that's why you get higher returns.
Yeah, I mean, I get in and out with profits and then move to the next thing instead of letting my stuff sit there and just slowly go up. You know, I mean, I can flip the same thing over and over for profits, and it give me the same return that it would in 2 years. Like your position with SPY, I could probably have flipped SPY multiple times and made 10 times the money versus
Yeah.
sitting on it for 2 years.
Oh, that's right. If you like sold at the high points and then bought it right back.
Yeah, buy it right back at the support levels. Oops.
Like realistically, how much of your time do you like? Is that a time consuming thing?
Not really. I mean, depends how much you're into it though too. I mean, I look at the markets every day. I look at my positions every day. I look for new stuff every day, but I'm into it. I enjoy it. I really love doing it. So
Yeah, I'd say like I'm enjoying like the learning process so far.
I mean, the more you're into it, the better you'll be at it, and the more money you'll make. But I mean, if you look at SPY right here, just since August, well, I mean, I'll go
Mhm.
all the way back to COVID. If you had bought it at the low of COVID and then sold it at 289, that would have been a $40+ return per share. And then buy it again when it drops here, and then sell it when it hits this high. So from 272 to 322, that's another 40-50 bucks per share, right? And then if it falls again, you got to get these big falls, and then it rips again. Look, I mean, up here, that's 2 or 3 months. Could have done the same thing, right? 296 to this is 359, so that's $60, and then it has the fall again. Could have did the same thing. Boom, hits this high, or not really a high,
Mhm.
but it 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 has its peaks and valleys, right? You buy the peaks and
Yeah.
valleys, you buy them off support, right? You get levels where, I mean, like you can easily look at this right here and see the the volume like decreasing, and then it kind of levels out with selling, shows some green, shows some red, and then starts to do green again, right? I mean, the thing here that I would like to point out is the fact that
His name is Woolman.
it's not
Woolman 911. The bottom right.
it's not like the drastic movement downward slows down, right?
Yeah.
And when it does it slow, and then you start to see it kind of change, that's a good entry. Like right here, at this point would be a good entry. You know what I mean?
Uh-huh.
So you can do that consistently. Buy and sell, buy and sell, buy and sell. Get a low, wait for it to pump, take some profits when it
Okay.
does, and then wait for it to fall again, right? SPY is not really a great example because it's just going up. You got to get stuff that kind of goes up, down, hits support, bounces, hits resistance, bounces, hits support, stuff like that.
Uh-huh.
Like this. I mean, it can flip pets 1, 2, 3, 4, 5, at least 5 times in the course of 2.5 months, 3 months. Could have flipped it. And it's not a huge change, but it's down, up, down, up, down, up. That's what you're looking for. You want stuff that does that, right? And this is consolidation. I expect this to break out soon.
Well, okay, so it's much better use of my capital if I like actively use it than just let it sit.
Absolutely.
Okay.
It's a waste of
So
time if you're just, I mean, you will make money, don't get me wrong, but it's gonna be a lot slower.
yeah, I want to try to maximize my gain. So would you recommend then if I just liquidate everything tomorrow and then I just opened Raw after you gave a presentation on that and
Yeah,
and just make
I,
my
I
my
would, yeah, I would get out of SPY. I think I mean, it could continue to set higher highs, but it looks like it's changing, right? I mean,
yeah.
it looks like it's peaked, crested, and starting to come back down. And I mean, it could pop back over that again, but at some point, this is going to go back down,
Yeah.
right? I mean, just look how it plays out, right? It does
Okay.
these peaks and valleys. It peaks and valleys, and then goes up, peaks and valleys, and goes up, peaks and valleys, goes up. It's going to have a peak, which this might have been, and then it's going to fall. I mean, I still think it might have room to run up. It's not, the height isn't enough, in my opinion. Like you see how this is much more slanted. This one's much more slanted. This one's much more
Yeah.
slanted. You know, this isn't quite slanted just enough, but it's at a high. And if you had bought 2 years ago, let's see how much we're looking at. What's your break even first?
What do you mean by break even?
How much are your shares worth per share?
Oh, like the average cost of when I bought it?
Yes.
I bought it for 260.
Okay. So you get a good price. You're almost up. I guess 520 would be 100%. So I mean you got good returns on it. But again, had you sold it, like had you bought it and then sold it somewhere before 2019 or before 2020, and then bought it again down here when it had its COVID low, and then I mean you would have been able to flip it nicely, right? And you would have been able to double the money that you've got easily. But I would sell it, and then I'd start flipping stuff. I wouldn't just sit on one position or two positions for 2, 3, 4, 5 years. I'd try and get in and out. I mean, the spreadsheet that I made, that's a monthly return, and you can't get monthly returns when you sit on something. If that makes sense.
Yeah. Okay, yeah, I'm pretty convinced then. This is a more personal question, but I also got a grand each in like Apple, Nvidia, and Disney. And like Disney was at an all-time high, so like it's safe to say I could sell those. And then like Nvidia and Apple I've been holding for 2 years too.
Well, Apple, I would keep holding. I think that's going to pump soon.
Okay.
Nvidia, let's see. Actually, I might see Nvidia crest here. I mean, it's just been going up and up and up and up. Now it's starting to go sideways, so it might fall down. You never know.
Yeah.
I mean, if you bought it 2 years ago, you've got some big profit.
Yeah, I got it. Let's see, like 260% return.
I'd say that's time to get out. I mean, that's a great return, and it could keep going, but at the same time, it's been testing its highs and bouncing off of it.
Yeah.
So nothing continues up forever. Everything has a reversal. Even if it's in a bullish long-term trend, everything
Mhm.
reverses at some point. And that's when you need to
Okay.
flip it. Sell it at the high, wait for it to reverse. When it stops reversing, you get back in, and then you wait for it to reach its next high. I mean, the easiest way to do this is, again, wait for it to hit a high, watch it fall, grab it at support, wait for 2 or 3 months, wait for it to test its high again, sell it, wait for it to fall back down. 2 or 3 months of share swinging is the easiest and safest way, but it's not going to produce the type of returns that my spreadsheet showed because you're not flipping it, every day or every week or, 2 or 3 times a month. Whereas you're only flipping it once every 2 to 3 months, you're still going to see good returns, and you're still going to, that's how you build your account. And once you
Okay.
have a big amount of money, then it's a lot easier to start selling shorter term stuff and taking quicker profits because you can start putting a lot more money into it, right? So, if you've got 5K or 10K, you can sit on something for 2 to 3 months, see a 30 to 60% return, sell it, wait
Mhm.
for it to fall again or get something else, and wait 2 to 3 months and wait to see that same 30 to 60% return until you get to $30,000. And then once you're at 30 to 50,000, then you can start putting $5,000 into a position and start looking at percent returns like 2.5 to 5%. I mean, 5 grand, 5% is $500. And that's a lot easier to make than 30 to 60% returns. right?
Yeah.
And the time frame is a lot shorter. So the object should be build your account value, and then once you've built it up to where you can start throwing decent, solid position sizes in at something and getting $500 every time you get out with a small percent return, that's when you start making real big money. That's when your account starts to really grow fast.
Okay. That makes sense actually. Okay. Yeah, thank you, Hostel. Like you really helped me like think about like my investment goals and like informing my decisions.
Great. Glad I helped.
Yeah, thank you.
You're welcome.
Yeah, cause like I'm only 21 and like that's one thing I have trouble like with this swing trading for like 2 to 3 months. Like my perspective is kind of like very narrow, and like I see like Tilio calling out all these like crazy calls, really quick scalps, and like I go to the success tab and I'm like, sheesh, man. Some of these like guys be making like 200, 300% return on investment, and like I'm like, I would like to have that, but I just don't think like that's sustainable because like I also see half of them lose just as much.
Yeah, I mean, definitely. That happens a lot. Tilio is really the only person that I can say that I've seen do those types of scalps and win 90% of them.
Yeah, I mean, like I see some of the screenshots of like the positions he takes. It's like, oh, I'm only in half a position, and I look at it and I'm like, sheesh, that's $5,000 you putting into a call option.
Yeah, I mean, he's using. This is what I mean. Like, he's got substantial amounts of money, and he can throw good
Hmm.
position sizes and take 2 to 5% returns, and it'd be $500.
Yeah.
And like if he gets something where it's like a 10 or 12% return, man, he's making $1,000, $1,500. It's because the size of his position and the account size is pretty large. I don't know what his total account size is, but I know he only does 5%, roughly 2.5 to 5% of
Yeah.
his total account in one position. And if you think about that, if you just do generalized math, if he's putting $5,000 into a position and that's 5% of his account, he's got 100K,
Yeah, that
right?
makes sense.
So, like I said, I don't know what his actual number is. Never asked. Not even really interested. It's none of my business. But what I will say is, the larger your account, the larger your positions can be, and the larger your returns are with smaller percentages.
Okay, then my goal should be to focus on just like consistently growing my account till it's like 50 to maybe 100K.
Yeah, no, I mean that's totally reasonable. I
Okay.
mean, did you download the new spreadsheet that I put out, the revised version?
Yeah, the more reasonable one you said, yeah, I did.
Yeah,
And I looked through it like I put in the conservative percent, and I'm like, geez, by year 4 or 5, I already have. Hold on, I have to look at the spreadsheet, but it was like a good amount of money by year 4 or 5.
yeah. I mean, it's huge. If you just stick with it and you do it for 4 to 5 years, you're gonna have more money than you could have ever thought was possible, and you can do it with just share swinging, the safest way possible. You can do it with that. If you,
Okay.
what I think options is for, like what Tilio's doing, is when you've got 500,000 to $1 million, then you can afford to lose 10 grand. It's not gonna kill you. And you can afford to put $5,000 into one position. You know, it's not
Yeah.
gonna kill you at that point. But if all you got is 5 grand, you're doing that. You're buying
Yeah, it's
options.
hurting
I
me.
mean, and now it's a lot more risky. I mean, he can get 30 to 50 contracts. So when he sees 1 or 2% return, he'll dump 15 or 20, and then he sees another 2%, he'll dump another 15 or 20, and another 2%, another 15 or 20, and that right there is an easy $1,500, $2,000 depending on the account size.
Yeah.
And I guarantee you, he's doing that within 5 minutes.
Yeah, he is.
So
Sheesh. All right.
It's
for
hard to
Matt, for
follow him too because he's
yeah,
so fast.
yeah, he's real quick. Like by the second week, I already understood what he meant by scalp. Like he's really efficient, and he got the capital to do it. So
Yeah, and if he takes a loss on something, it's not a big deal for him because he's smart about how he splits up his
manages
position.
his risk. Yeah,
Yeah, and hedges. Yeah, I mean, he knows how to manage and mitigate his risk. And with option buying, you really have to know how to do that well. Because if you don't, you're going to fail. You're going to lose. So that's why I try to
yeah,
recommend people to concentrate on a Roth account, concentrate on swinging shares and building your account up. And then at some point in the future, you're going to be able to, um, like let's say you've got a day job and a career and you're growing your day job and career, you're young, and let's say you're 21, and then by 30, 35, you might be making $100,000 a year or $150,000 a year and be married, and at that point it's like you've been investing to your Roth this whole time and building that account, and now you've got the capital extra to start throwing at options, right? Now your
yeah,
paychecks are $7,000 a month and your bills are only three, and you can save 4 grand. So then you can be like, well, you know what? After I max out my Roth account for the year, now I'm gonna start throwing money into a margin account or something, or a cash account, and just start buying options and see what I can do with it. Like save up 10 grand
yeah,
and then start trading positions that are $500 a piece. There's a lot of ways to do it. But
okay,
building the foundation for your future is the most important thing, and people are willing to throw away their money they've got right now instead of building the foundation, because when I turn 59 and a half, and if let's say my account's $10 million, I can easily take 100,000 of that, put it into a margin account, and start day trading, scalping. And if I lose 10 grand today, whatever, maybe this
sheesh,
wasn't for me, or I can YOLO 10 grand on something like Tesla calls. Let's go
sheesh,
YOLO Tesla calls, and then I bank 200% on that. There goes $30,000, right? $30,000 in profit, or 20 in profit plus the 10 you put in. So
yeah,
that's how I look at option buying and scalping is wait until you got a substantial amount of money to throw away, right? Like if you're making $100,000 a month, take 10 grand out and throw it away. Whatever,
yeah.
you know. But if you've only got 10 grand and you're trying to make it with that, it hurts when you lose 1,000. It hurts when you
Oh
lose
yeah,
two,
oh yeah. It definitely hurts.
right? But it's like
Yeah,
this: if you've got 10 grand and you lose 100 or 500, it doesn't hurt as much. You know what I mean? So that's kind of how I think Tilio's trading is. He might have 100,000 in an account, but he's only trading $5,000 each. That's 5%, right?
yeah.
So if he loses 1,000 off that 5%, it's not that big of a deal because he can make it back, first of all. But secondly, it's 1% of his account. It's not 50. Like some of these people, you'll see they'll invest
Yeah, they're like 12 calls
50%.
deep.
Yeah, I mean, like I heard somebody the other day ask me, what do you think I should do? I'm all in. I've got my life savings into a particular ticker, and I'm like,
Oh my
is that a
gosh.
joke or are you serious? So
Yeah, I definitely don't want to be like that rash and like you said about the foundation thing. Okay, there I'm gonna start like changing my mindset then.
that's what it's all about.
Where do you think I could like learn more about like swing trading and just like conservative ways of growing my account?
Other than my live Q&As, my videos, I made
Oh
some
yeah.
videos on that stuff. I'm not directly related to it, but I mean, it's the strategies that I use to swing trade.
Okay.
Yo, can I ask a question after him?
Oh yeah, my bad. All right. Thanks so much, Hostel. Like you really helped me with these Q&As and the lectures and presentations.
You're welcome. Go ahead.
Yo, hostile. I'm actually pretty curious about this one ticker, and I want to try swing trading it when the market opens tomorrow. It's what is it called? Qualcomm, QCOM. Basically, the news was that Apple said they were creating their own modem chips, but then there's still this is like long term like negative news I see because I could still see their revenues doing great because the iPhone 12 is still having these Qualcomm chips in them. So I still see a lot of money. I just think that investors reacted very negatively to it. Just recently, it was down like I think it was 8%. Just the yeah, I think it was yesterday or not yesterday, Friday. It was down.
That's what I call a waterfall, and waterfalls are usually pretty high. So at what point does that waterfall turn into a stream or a river, right? Like basically, when does it stop falling and start to go sideways? You don't want to get in too soon and then it keeps falling. Because right now all I'm seeing is blood red. You know what I mean? Like,
I think that's too far.
I mean, look how drastic that drop is. That's a super drastic drop.
Can you take a look at the what is it called, the 3 month or the 1 month?
I mean, that's a drastic drop.
Yeah, but it looks different to me on the 1 month or the 3 month.
This is a 1 month, 30 days. 3 month is 90 days.
It looks like it's at support on whatever chart that is right now.
That's short-term support. I don't like short-term support. It's weak.
Okay. I mean, I don't know. I don't go that far back, I guess. Would that mean that I shouldn't be trying to look that far back? Because I usually don't go that far back when I'm looking at charts.
You should go further back.
Extremely back, like 1 year back.
No, 180.
180?
I mean, you'll establish good support levels.
Yeah.
I mean, I don't know. I don't follow this much, so it's hard for me to say. I mean, yes, what you're seeing is a support level, but here's another one. Here's another one. You see, I can go further back and find support levels. Right? So what does it do now? Is it gonna, if it breaks through this level, now you're looking for it to come down here. And
Yeah.
what's to say it doesn't break through it?
I think I don't know. What I'm thinking is fundamentally is that um just the investors reacted very negatively, obviously, to this news, but it hasn't actually happened yet, and it shouldn't be happening for the next couple of years.
Well, it's not necessarily based on what's actually happened, more as how people feel about it and their emotions, and that reflects in the market. And when you see huge drops like this in a short period of time, that means it's not going to stop. It should start to slow. Look for it to slow and start to consolidate and go sideways or even out. But don't get into it while it's dropping. I mean, like
Yeah.
Intel. Let's look at Intel. I'm gonna show you exactly what I'm talking about. Look at this drop. You're talking about getting into something where it's like right here. You know, it's had 2 days of drop, and then we're on day 3, I think. And you know, this is what I'm talking about. You want to see it do this sideways movement, right? Once it starts to do sideways movement, then you can consider getting into it. But don't get into it while it's dropping, because you're not. It's going to take a while to get back up, especially with big drops like that.
So you're saying that for your trades too, you would wait for some consolidation after after a drop, or would you? I thought last time you said you would enter, um, you would just enter. I don't know.
Again, you got to look for support levels. If something's dropping hard, don't get into it until it stops bleeding. You don't try to get into something that's bleeding, because it's going to continue to bleed, right?
Okay, yeah.
I mean, think about if somebody gets shot, right, and then somebody patches them up, they're still bleeding afterwards. It takes time for the bleeding to stop. Same thing with stocks. If something's bleeding like this, it's going to take time for it to stop. Give it the time to stop. You want to get into something where, somewhere here, right? Or when it had this drop, you want to get in somewhere in this area, right? You need to see some green, because when it has a huge drop like that, you don't want to get caught inside of it. The way I always refer to it is, don't get in front of the wave, get behind it. And you're trying to get in front of it, right? Because QCOM is doing just that.
Yeah, that's true. That's
It's
a
a
good point.
wave.
Okay. Yeah, I was looking. I guess I looked to short term then.
That's why I tell you to go further out.
All right, I should go further out. And by the way, I realized just one thing too, Hostile. When I'm on TD, it looks so scrunched up, my chart. Do you think it's like my monitor needs to be bigger? I asked one of the people in the server, that like the analyst Joe, and he just told me to change the setting. But I don't know. When I look at like charts on TradingView, like line charts, it's a lot easier to identify like support and resistance levels for me at least.
I don't know. I mean, does mine look crunched up?
No, but I don't know. When I look at it myself, it just, I don't know.
So if you look on the right hand side above where the prices are,
Yeah.
there's a thing you can switch for auto.
Yeah, but once I do
Auto
that,
size it.
how
If you
how
uncheck
I
auto,
don't know.
I know
and
his
then
problem
there's
because
the fit
I saw his
studies.
charts. And
Yeah,
what
no,
it
I
does
do
is that
that.
he has multiple
I have
charts
that.
open
I have
at the
that
same
checked.
time.
Whatever. I don't know.
So there's multiple people talking here.
His problem is that he has multiple charts open up at the same time. I believe it's the window right above that where you can control how many charts open you have at the same time.
When I have one chart open and it's this thing, I use the price, the price to the right side. I drag it up, and like the sticks are just, I don't know. Some of them just stop appearing on the chart. It's hard to explain. But honestly, it's fine. I'm not too worried about that right now.
Well, if you've got over, I think it's $2,500 in your account, Thinkorswim, you can call them and set up a platform walkthrough, and you can say, "Hey, how do I get my chart to do this?" And they'll walk you through how to do it. And a lot of people don't realize you got a certain amount of money in Thinkorswim, they'll actually walk you through a crash course on how to use the tool. Take advantage of that. It's free.
All right. Oh yeah. Also, one more question. Can you have you made any trades last week or entered
No.
any?
No.
Okay. Any trades? Oh, can you review it, or can you just show me a trade that you made and like the thinking you had behind it? Like not like last week, or just any trade.
This is what I'm in right now.
Oh, you entered on the rocket at the key, the lowest support, right?
No, I got in at $20. My break even is $20 on Rocket.
Why did you enter there?
I don't want to enter right at support because it might not reach support. I always get it just above support.
Okay, I see. If it broke below the lowest support, would you have just held it through?
I would average down by more.
Oh, okay. Wouldn't there be a risk of it just going down and it would take a long time for it to come back up? You would keep your money tied down to that stock, right? For
Yeah,
how
bag
long?
hold it as long as you need to. Never sell for a loss.
I see.
Never.
Okay. Well, I mean, yeah, that sounds like it seems like very low risk the way you trade, honestly.
I mean, it is. I don't lose. I
Yeah.
might bag hold for a while on something, but I sure don't lose.
Just make sure you don't lose. Yeah. This is interesting. So
Yeah.
you use the Hostile, you use the standard deviation scanner and you figure out these, or do you just flip through the tickers?
No, I just flip through tickers. I mean, standard deviation scanner is for when I can't find anything to trade off of the stuff I normally trade. Then I'll see if I can find a home run somewhere with it.
So, oh, okay, I see. Okay, so for the past week, you've been flipping through tickers, just looking for these setups, and you didn't find any, right? For this week.
I found one, but I wasn't around to get into it, unfortunately, which is Lockheed Martin. I wanted to get in right here, under 360. I still think it's gonna fall. I think it'll test down here at under 350. Because the second standard deviation channel, I mean, when I go I mean, the thing here is it didn't drop as low as I'd like to see it. But typically when it comes near the second standard deviation channel, it bounces, right? So right
Yeah.
here, it came close, it bounced hard, and then it fell hard, went below the second standard deviation channel, bounced, kind of went sideways, fell again down to the second standard deviation channel, but it didn't really bounce that hard this time. That's what makes me think that it's gonna fall below it again. So if you see the trend here, this point and this point, right, it might equal this, and then this is going to come down here, right? It's going to do something like that, I think.
I see. Okay, nice hypothesis. Okay. Oh, final question, Hostile. What is it called? For the Roth IRA, you can take out profits after 5 years at a penalty of 10%, and whatever tax bracket you end up in after taking that money in, right?
Yes.
But you could choose how much money you want to take out, right?
Yes.
That sounds really good. Still, that sounds fine.
I wouldn't touch it
until it gets to until you start
Millions.
making millions, right? So that would be in a decade, right?
Yeah, 10, 15 years.
15 years. Yeah, honestly, that seems like a really good plan if I can actually implement it. The goal for me, I guess, is just to be able to get a strategy down that can consistently make me the gains that I'm looking for that, to set that up, and
I
then
mean,
just keep.
the goal is to not touch it at all until you're 59 and a half. And I guarantee you, if you implement the strategies that I've suggested, you're going to have millions and millions of dollars.
All right. Okay.
Millions. You're 19 years old. You're going to have millions. That's 40 years. If you don't touch it for 40 years and you just continue to compound that money, you're going to have millions of dollars.
Yeah, that's a lot.
Trust me.
I will. All right, I'll just focus on just trying to learn your standard deviation thing. Come to your lectures all the time, and just keep trying to learn how to scalp, because that's what interests me right now, I guess. Thanks, Hostile.
You're welcome.
I know you were just preaching the benefits of swing trading when you're starting out, but how would you recommend finding good stocks to trade for options? or how to put together a good watch list for options?
Honestly, that'll take time. It's going to take time to find things that are worth trading options, right? Not every ticker out there has options, number one. But not every ticker out there has the volatility that options requires. So, I would say pay attention to what all the analysts are trading. Typically, what they trade is going to be something that's worth doing options with. That's where I would start. You're in the server, so maybe look through all the analyst channels and just grab every ticker you see and throw it in a watch list and then start paying attention to it. I mean, I think that's a start. I mean, that's a good place to add a good 20 to 30 tickers to your watch list, right? And I mean, that's a lot, right?
Yeah, that makes sense. Thank you.
You're welcome.
Hey, can you hear me?
Yes.
I have I'm on the phone. Okay, so I just want a few tickers broken down that I'm looking at. So the first one is Big C. Can you give me your opinion on that, please?
Sure. Well, that looks like a new one. It's getting down here near support.
Yeah, I took a small position around $76 because I felt like it was kind of like a descending triangle, and it kind of had like a breakout, and it's like retesting right now. So that's what I saw. But last Friday, it was like dropping a little bit too much past that previous micro support right there at like $72. So I was just a little bit worried about that. But other than that, I still feel pretty comfortable about the position that it's going to go up long term. But I just wanted your opinion on that.
It's definitely at the lower end of its spectrum.
Mm-hmm.
You in shares?
No, I'm just in one contract right now.
I'd be more comfortable with shares on this one, but
Yeah, for sure. I'll probably look to exit a position on the next pop or something.
I mean, I would say where it's at, there is support over here. So you got multiple support levels, so this could be a strong spot where it's at.
Yeah, last week I was up 200%. On one of them, my dumbass didn't take profits, so.
Well, maybe you'll learn from that mistake, huh?
100%, for sure.
But I mean, I think it's at support.
Okay,
Could it go
let's see
lower?
what happens tomorrow. Yeah, I guess we'll see what happens tomorrow.
If it hits 64, I'd buy shares of that.
Yeah. Yeah.
I mean,
Okay.
it's too new for me to be comfortable trading that. But if you know something about the company, then by all means, trade it. I don't know anything about it, but
they're just supposed to be like a rivals with Shopify, so they're supposed to be new.
I see.
But yeah, that's about it. But I just kind of like the pattern because it was just touching support and it looked like it was started trending upwards. But another one I was looking at is Tilray, just because I know the cannabis industry's been kind of popping recently.
What's
And I thought this one, like Tilray, a lot of the cannabis stocks were kind of dropping long term, and it seems like a lot of them are reversing. But
what's the ticker
Tilray,
symbol?
TLRY.
So the thing that I've always said about cannabis stocks is until the United States fully approves it to be recreational and all states follow behind, I don't see cannabis being too strong. I mean, it's going to have its pops, it's going to have its emotional movements, but Until the government signs up and says, "Hey, we're gonna decriminalize this, and we're gonna allow states to sell it as they sell cigarettes and alcohol." Until it has that
Mm-hmm.
status, it's gonna be just a bunch of random movements.
Mm-hmm.
You know, I mean, right now there's not even half of the U.S. is selling it legally, and not even half of the states out there are recreational. You know, so
Mm-hmm.
until you have the entire United States of consumers getting in on this stuff, all these stocks are just hype.
Mm-hmm. Are you looking? How come your chart looks different? Are you looking at this on like a logarithmic scale, or like chart or whatever? Is it like? It just looks like stretched out differently than mine.
Well, I've got pre-market and after hours on here, and I've got 180-day 4-hour chart.
Chill.
I'm
Alright,
also
I just
using
need.
Heikinashi.
What's that?
It's just a type of chart type.
Oh, okay.
Heikinashi.
Yeah, it looks different. Yeah.
I mean, if I do
Chill.
this,
Okay.
see, I mean, the candle trend, it looks a little different.
Mm-hmm.
Bars look different. I think for me, the Heikinashi is the best looking. I mean, I can do lines, but with the
Mm-hmm.
Heikinashi, I can see, like, it fills everything in. It shows me, you know, the body of the candles and the wicks. You know, whereas if I do,
So what are those lines in between? Are those like predetermined support resistance lines?
you talk about these colored lines. Is that what you're talking about?
Yeah, those.
Standard deviation channels.
Okay.
I made a video on my channel about standard deviation channels. If you're interested in that.
Okay. Yeah, I heard the last person talk about that, so I'll check that out. So based on the ticker, the pattern itself, like, what are your thoughts on it? Does it look like just based on the? Mm-hmm. Does it look like it's reversing to you at all, or is it just on a straight downtrend right now?
A short-term downtrend. This right here is short-term downtrend. It has a little,
Mm-hmm.
the longer, like a 2 month, 2 to 3 month trend is. I'm not really. I don't like how he got this busting through it, but it, 2 to 3 month trend is up. But it's going to be interesting to see what it does right here tomorrow.
Okay, so this is basically a 50-50 area right now.
Yeah.
It looks like. So
And
essentially.
it did a double top, it looks like. Potentially.
Okay.
Right here.
Okay. But it's still making higher highs and, well, kind of.
Yes and no.
Yeah, well, that one big spike kind of messed it up.
Yeah. If it didn't have that huge spike, then I'd say, yeah, you keep going. But
wait, I think that was the date the presidential election. Oh yeah, because cannabis stocks kind of popped when Biden got elected.
yeah, all of them did at that time.
Yeah.
But that's
so
what I was saying. It's not. It's just hype because nothing actually
yeah, I mean, I'm not
happened.
investing. I'm not investing into it. I kind of entered a small contract. I just got I think like 2 contracts. It's like $100 worth to see what's up and see where it goes. But just because on the long term trend, on the weekly, it does look pretty solid. But I have one more ticker. It's TTCF. This one's relatively new too. So I got one contract for this one for January 18th. I think for like $25, something like that. I don't remember, but
it's breaching the most recent resistance point right here. Right. The next resistance it needs to breach. Well, it's actually kind of at resistance right here. Weak resistance. That's weak. So I mean, if it breaches above that, this is going to be your next point.
Mm-hmm.
But I mean, it does look like it's had a downtrend and now it looks like it's reversing. So that might be a strong support level right here.
Sure. Okay.
I don't see too much support to the left of it though. I mean, maybe this point, but the rest of these
Mm-hmm.
are too low for it to be. I mean, they're too low to be support levels. So I don't really
Sure.
see too much support. But I like, strong support is trend reversal, right? And this continues up. This will definitely confirm that it's a strong support level. But it's got to
Okay.
breach. It's got to at least breach this resistance point for me to say it's a strong level.
But as of right now, it looks like it's gonna probably try to make it to that low. You
Yeah, I
think?
think
Yeah.
so. I mean, it's testing this for sure.
Okay. Cool.
And I don't think
Sounds
it's going
good.
to have a lot of strength. I think this is going to have a ton of strength. I mean, it might because it bounced off of it
Well,
once, but it looks like it's going to keep trying. So
yeah. Well, till January 18th, I'm gonna try to see if we can make it up there with the swing trade. So, and then try to make this Christmas money. Quick question: what are your thoughts on like Bitcoin and stuff, and like Ethereum, cryptocurrency?
I don't really mess with that stuff.
Mm-hmm.
I
Do you ever
don't.
look into it at all? Like any news or anything like that?
No, not really. Nope.
Oh,
I got.
true.
There's way too much in the regular market for me to pay attention to that.
Yeah. So what are like some stocks that you're investing into right now? Like long term?
I don't do long term.
Like no, you don't. So everything you do is just for trading, primarily swing trading.
Yes.
And
100%.
and then do you invest into anything outside of your Roth IRA, or do you only do that? Like, do you do real estate or anything, or?
No, I think real estate's for people that got a ton of money.
True.
Me by myself, trying to come out of my pocket for 250K. I can make more money in the stock market with 250K than I can make on a $250,000 house.
Yeah, that's true. That is true.
But when
Do
I
you
got $1
trade
million,
Tesla?
I do, yes. When I
True.
got $1 million to throw at real estate, and I can buy 30 houses with 20% down on each, roughly.
So is that what you would do with $1 million if you had $1 million?
No, I'd keep trading stocks until I'm making $1 million, or let me rephrase that. Until I'm making $200,000 to $300,000 a month.
Mm-hmm.
When I go into real estate, I want to buy 50 to 100 houses at one time. I'm not interested in, one or two.
It's pretty beast mode.
Yeah, I mean, to me, it's, some people will argue that it's worth buying, but to me, it's like, I want to do things in massive scale. Like, think of wholesalers. They're not interested in me or you buying from them. They're interested in
True.
the people that are
Yeah.
getting
I
1,000
used to.
units.
Yeah, I used to do wholesale for electronic cigarettes and CBD. It was so like we only made like 10-15% margins, but we move thousands and thousands of pens or cartridges or whatever or CBD products per month.
Yeah,
So
and
like everything kind of added up, So
that's what I'm looking for as far as real estate.
yeah.
I'm not interested in a little one house here and a townhome. I want to build a townhome community with 300 to 500 townhomes and sell all of them. So I want to buy like 10 acres, 5 acres, however much I need, develop it, build, 100, 200, 300 townhomes, rent out 50, and then sell the rest.
You want to build clubs or anything like that? Strip clubs or anything like that?
Nah, I ain't interested in that.
Just fucking.
Nah.
Yeah. So what state would you do that in?
I haven't really thought about it, to be honest with you. A state that benefits someone with that type of mindset. Don't know where that is. I haven't gotten that far in life yet, and I may not. But if I do, then I'll start. I'll start digging into it once I've got the money and I'm ready to make a move like that. Then I'll start looking into it. But right
So what
now,
made you what made you choose stocks to be your primary choice of investing in making money versus like doing, I don't know, real estate investing or something like that, or I don't know, starting a business or whatever? What made you want to do stocks?
Well, stocks, I work for myself. Stocks, I decide when to lose, when to win. I have the power with stocks, full autonomy. With real estate, you got to deal with renters, you got to deal with a property management company, you got to deal with the government. With a business, you have to deal with customers, you have to deal with the government, you have to deal with, your suppliers. There's just a lot of things that go into all these other things. Whereas stocks, it's just me and money. That's it.
Yeah, too much BS in between, right?
Yeah, and when I can turn this into, substantial returns, then I can start putting my efforts into other things like real estate. I probably will never ever open a business ever because I'm just not interested in dealing with people in that sense. Like I don't
I'm
like
actually, yeah.
what I'm doing here, teaching people. I love doing that. I don't mind that, but I'm not interested in like my wife wanted to open a bakery, and if she wants to, have at it. But I'm not interested in doing it for myself.
Yeah,
And I'm not
same.
interested in going there and saying, "How you doing today, sir? Give me your $5 or $10 so I can bust my ass for that." No, no,
Yeah,
thank
that's the
you.
same reason why I stopped wholesale too, because I was kind of tired of dealing with customers and stuff and business owners, and they're always kind of like, I don't know, it was just kind of annoying. I guess I'm a little bit more introverted, but yeah. Well, thank you
You're welcome.
for your time. So.
Yeah, you're welcome.
Yo, hostile.
Yes.
On Sunday, or I think it was Sunday. You were talking about what is it called? Doing one-on-one thingies. So, what was that about again? Can you tell me? I forgot.
You were asking about getting personal training, and I said that we're not ready for that yet on this server.
Oh yeah, that's true. Okay. But like, you guys are working. Are you guys actually like trying to like make that a thing, or is it just like? Okay. All right.
Hey, also, you hear me?
Yes.
I want to ask another question. So, what are your criteria for entering a position? Like, when you look at charts, right? When you look at, let's say, long term, because you're a swing trader, like a daily or weekly chart, what what makes you enter a position? Like, what's your checklist?
So I do 180 time frames. I don't mess with that
180
small
4 hour.
stuff. Yeah.
Okay. Yeah.
And I look for higher highs, higher lows, or vice versa, support resistance, trend direction, confirmation of support and resistance. That's if I'm doing shares. Fundamentals can be important, but I really honestly am not interested in holding it beyond a week or two if I can. If I have to hold it longer, then whatever, just got to. I look for additional support levels for averaging down. I look for resistance points that I want to get out of.
Do you have any ticker symbols that you're specifically looking at long term right now, or anything that you're swing trading or looking to get into?
I mean, I'm in pets and Rocket and Tesla, and I think I want to get into LMT and Netflix at some point here soon.
Can you break down LMT and Netflix? I don't know if you did that already, but
I mean, it's pretty simple. I got a support line here. I like it
true.
underneath.
That's super simple.
Yeah, I mean, I like it underneath the support line. If it breaks through that, I'm looking to see if it touches this one. So if it comes back down to 354, 355, I'll probably grab 2 or 3 shares. If it comes down to
54, 55.
Under 350, I might throw another 2 or 3 shares at it. If it comes back down to 340 area, then I'll probably grab 5 to 10 shares of it.
And you only trade stocks that are basically well known, right? You don't do anything that's like, you know, less than like a million shares volume. It seems like everything that you're in seems to have
Yeah,
a lot of volume.
probably. Yeah, I mean, the amount of shares that I'm doing though, it's going to be a grain of sand on the beach. I mean, I'm not interested in basically any of the stuff that you're asking about.
Mm-hmm.
It's just too new. I need stuff with a lot of old data, right? Like,
Mm-hmm.
I don't like trading things that when they hit a new low or a new high, there's nothing to relate it to, right? I don't
Mm-hmm.
like trading stuff like that. I mean, granted, new highs is one thing, but new lows, that's not something I like to see.
Mm-hmm.
So if it doesn't have a low in the past I can reference that new low in the short term, then I probably won't touch it.
Mm-hmm.
You know, like Intel is a perfect example. It's got years and years and years of experience. Although I don't like Intel based off of its performance lately. If I go 5 years back, you know, where it's at right now, or at least its previous low, you know, let me get this. At least there's some data there that says, all right, its current recent low, coincides with COVID low, coincides with whatever low this is, and whatever low this one, this one. I mean, there's multiple points where this is a strong support level, right? And I can use that to my advantage to say, all right, I get all these support levels. This one's going to bounce. Now, is it going to breach its resistance point? I don't know about that, but it
It
will
did bounce
bounce off
too.
of that, and it did bounce, yeah. And I sold out of this position. I made $150 here. You know, I
Nice.
sold it right at 48.50, I think it was. My break even was, I don't even remember. I just know I made $150 out of it, and I had about 1,200 into it. So I start no 1,400. I had 700 initially. Up here, I bought, and then it fell down to this support level, and I bought another 700, and then my break even was like 45, 46 maybe.
Mm-hmm.
I don't remember, but I sold it in $48 range somewhere. I made 150 bucks. So
Nice.
I'm out of that.
So,
I'm not
do you
interested in
do
trying to
trading
bleed it, you know, bleed the
only?
profits. What's
Do you
that?
trade Do you only trade as income right now?
No, I have a day job.
Oh, okay. Oh, okay. I was going to ask you how you allocate funds for like living expenses, or do you not allocate funds at all? You just leave everything in an account?
Yeah, I don't touch the account. I just trade it, other than
True.
contributing to it.
True. Okay. Sounds good. Thank you.
You're welcome. Mario, you there?
Yeah, what's up?
Since you started doing swing shares, what's your percent return on your total account?
68%.
68%. Hear that, guys? And how
Yeah.
long you been doing that?
Consistently.
Since I showed it to you. How long
Yeah,
ago?
pretty much. Yeah, I mean, like just this last month, I made 1,500.
So in
I
1
know
month.
that's not like, yeah, and that's like secure gains, no risk, no nothing.
Right.
I haven't lost in one trade since I started doing swing shares. Yeah, I'm like your prodigy in that sense.
And in case anybody doesn't know, Mario came in doing options, and I showed him the ways of swing trading, and he gave up options, started doing swing trading, and he's already up 68% of his account.
Hey yo, Mario.
What's up?
So how did you like learn how to swing trade? Cause like I'm fairly new and like I just made the decision to like switch to a more like conservative and consistent way of trading.
Well, the thing, unfortunately, everyone should learn how to trade off of just support and resistance, because that's the fundamentals for any type of trading. And once you understand that, and Hostel has a couple good videos on that, if you can understand support and resistance and trade successfully with shares, you can then eventually go trade options again. And Hostel says it himself. It doesn't mean that options are bad, but we really want you guys to get a steady source of income right now, and then what you do with that later is up to you. If that makes sense.
Yeah, that already made sense. Like, I know I'm not ready to do what Tilio's doing, and like I'm just trying to grow my account to a more reasonable size, and like hopefully by learning how to swing trade off of support and resistance, that makes me like better trader.
Yeah, if you can learn how to really identify support and resistance levels, as well as channels and trends, that's all you really need. Like, don't overcomplicate it. You can add a couple indicators if you want for more, certification on your end. But that's it. Like, there's no magic trick. There's no secret formula. There's no algorithm. It's just support and resistance. It's that simple.
And everything I've taught here, all my videos, I taught all of this to Mario, and he's taken it up and been successful with it. And again, made 68% return on his account this year, probably in a short period of time. And it's the same thing I'm telling everybody else. There's no difference in what I'm saying. I didn't take Mario aside and say, hey, look, I'm gonna teach you how I specifically do it, and I'm not gonna teach anybody else. You know what I mean? Like, he learned in here just like everybody else is here trying to learn as well. It was live Q&A.
I used to be at work. And instead of it being work, I was listening to the Q&As. I remember asking you to teach me about support and resistance. I don't know if you remember that.
I know you had a lot of questions.
Yeah, because I wanted to learn. I was hungry. I wanted to learn. I wanted to make sure I understood what I was doing.
Yeah, I mean, it's that simple, guys. I mean, Mario's a perfect example of how you can be successful in a short period of time. It's that easy. It really is that easy. Overcomplicating things, thinking too much, you're just going to paralyze yourself. Just start with the basics and move on from there. Trade off of the basics, trade shares,
Okay.
virtual trade. Don't get into something with real money until you're comfortable with what it is that you're doing or what you think you've learned, right? Until you have confidence in the stuff that you are learning, and you can go out there and say, oh, I know where support is. I know where resistance is. I know how to determine trend. I know how to look at this or that. And then you just use those things and just trade shares. You don't have to go into options just yet. I mean, when you pop out of your mom, you're not running. You know what I mean? Options is running. Stocks is crawling like a baby.
No,
Or shares.
I believe everything you said. I believe it.
So it's absolutely important for everybody to understand that. I mean, that should be the core of every trader is support and resistance. If you can't draw out support and resistance, you shouldn't be doing a single thing until you can. And that's why I made those videos, so that you can go out there and look at it and see it and rewind it and watch it over and over and over until you get it. It's that simple, in my opinion. I believe it's that simple. And Mario has proven it. I mean, I don't know how smart he is. I don't know if he's got a degree or not. I don't know anything. I just know that he's interested in learning, and he took that information, learned it, figured it out, and within a short period of time, made profits. And there's actually a handful of other folks that I know on the server that I've helped do the same thing, and every one of them have told me, dude, after you taught me support and resistance, I've been successful from that day. That's really the main thing. Everything else is either a confirmation, something to say, all right, what I'm looking at looks right. This other piece that I've added to support and resistance confirms what I'm seeing, right? Or it's just noise and spaghetti on your chart. Like somebody threw a whole plate of spaghetti on somebody's chart, and it's got 4 or 5 SMA lines and Bollinger Bands and just all kinds of stuff. And like, at what point do you determine where any of that makes sense? Like, I've tried it. I've had multiple different things on my chart. I have like the VWAP and SMA lines and Bollinger Bands, just all this stuff. And I'm like, man, nothing works. So then I just erased everything, went back to square one. I said, all right, what am I not doing right? What is it? There's got to be something out there that helps me determine this stuff without having to look too deeply. And that's when I discovered support and resistance. And after I discovered that, it was like game over. Making money. Tons of money. VCAP. All right, so does anybody else have any questions? Can I break down Apple? Okay. So here's the other thing that I want you guys to realize. When I go to the 180, sometimes it's too much, right? Because like Apple, perfect example, 138.55 is its post-split high, right? So I try to get into where, there we go, that's perfect. This is what I want to see. Because everything prior to the split is irrelevant to me now. So with Apple, it's an uptrend, setting higher lows, and it's got this resistance line that goes straight across that it keeps kind of bouncing off of. It went through it this time, but it's testing it again, and you got this trend line here. You got two trend lines actually. I think whenever Apple decides to release its iPhone 12 revenue and sales, that's going to be when it tests that 138 high and probably goes through it. This is looking eerily similar to Tesla.
Perfect.
If you look at Tesla from post-split, it's doing the same thing. Higher lows, has this resistance line that goes straight across that has a couple of points on it, and then it broke through, right? Again, look at Apple. Post-high, higher lows, resistance line that goes through a couple of points. It's going to bust through that at some point, and it's going to test this at a minimum. It's just a matter of when. That's the question. And that I don't have an answer to.
Would you enter a position right here where it's at, or?
No, I'd probably, I'd say to wait until it goes below 120, at least as far as shares go. Options, you could buy leaps for options. So how much is a leap? Well, it's really cheap. You could buy $1,800 worth of a leap, and I guarantee you at some point it's going to pay.
True. Okay. All right, that was the last question, I promise.
No worries. Okay, anybody else?
Yeah, I also have a question.
Okay.
Have you ever heard of VCAV's voice?
Yes.
I have never heard his voice.
He was talking earlier.
Was he? I have never heard his voice. We've been friends for so long. I haven't heard his voice once.
It's a mystery. Don't you worry about it.
There you go.
I have heard him before then. That voice is very familiar now.